Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Friday. We got through the week. July 31st. We got through the week. It's the last day of July. I didn't even realize, but today is indeed the last trading day of the month. And what a July it has been. But we're here. And I think, to be honest, yesterday was the climactic end to this month. And obviously we will discuss and talk about what happened yesterday. I think yesterday was a top 3 crazy day for the past 5 years of me covering the stock market. I think it was the craziest day in terms of how the storyline ultimately developed for 2026. And so there's a lot to get into, a lot to talk about. Thank you all for being here. We're actually not doing that well in the pre-market, to be honest, which is kind of annoying. Some stocks are up. I mean, a lot of stocks are up, but they were up a lot more last night. And so it's one of those things where, we just went through all these pre-market bounces and then, flushes out as soon as the market opens. So and yesterday was the first real bounce we've had in like a month. And yesterday was a real bounce, 20, 25% up on a lot of these different names. So I think today is going to be one of those days where maybe we give some of it back, and that's kind of natural. But hopefully we can hold on to a decent chunk of it. Amazon is the story of the morning, which we will spend some time on, up 10% in the pre-market. This is a stock that, honestly, I think if I pulled the chat, 85, 90% of us own this in some way. This has been a name that a lot of people understand the thesis. It's not really that contrarian to be long Amazon, but it was a question of when are they going to be able to say what they need to say to get the stock to go up? And I think the biggest takeaway from Amazon, and we'll talk more about it, is they said we're going to increase CapEx meaningfully, another $20 billion, not for 2027, but for 2026. And there's only 6 months left of 2026. So the fact that, they're increasing CapEx for this year in a substantial way, and the market didn't flinch. The market said, okay, if you're going to do it, you can do it. And we believe that you're doing it for the right reasons. I thought that was a very, very good sign from Amazon. And quite frankly, that's very good for the semis, because if Amazon's going to be spending more on compute, once again, the semis will be getting a lot of that money. Micron right here up 3%, DRAM's up 2.7%, SanDisk up 4%. You got Tesla. It's some crazy news with Tesla last night that Elon came out and said is false. Tesla gapped up to 325, and now it's back down to 310. So we'll talk about that. Nebius up 6%, almost at 200. Marvell, that's up 5%. Credo's up 4%. Reddit and Roblox. Reddit had a good earnings. Roblox didn't. Nonetheless, Reddit had some things that the market didn't like. That's why that's down 15%. We'll talk about it. Roblox missed on their daily active users. That's why that stock is down 21%. S&P 500 still green in the pre-market. Overall, it has been an absolutely crazy week. We had all of big tech earnings this week. And, big tech, the big tech companies, the Max 7 did what they needed to do. Now we've got NVIDIA left. And because the Max 7 did what they needed to do, I think NVIDIA is obviously going to do what it needs to do. But July was a tumultuous month, and with the FOMC, it's just now a simple question of, can we rebound in a meaningful way? And is that rebound going to be the result of the structural deleveraging from the Leopold situation being over? Or is there something else to the semiconductor sell-off that was happening besides just a fund blowing up? And the month of August will let us know what's happening there. So thank you all for being here. Got a lot to talk about, a lot to get into it. Shahub says hello from Peru. It is a Friday. We haven't done this in 2 weeks. So put in the chat where you are watching from. Where in the world are you consuming the Market Open from? And then we will get into everything that we got going on. Rick, good morning. Sal, good morning. Apple's down 8% because it pumped a lot in the month of July. And they missed on a couple metrics on services and China revenue. And so the street took it down. Honestly, I just think it was one of those quarters where Apple needed to not make any little mistakes. And really, it was a phenomenal quarter that they had. iPhone revenues still beat. Overall revenues beat by $3 billion. EPS was phenomenal. Fastest quarter in 5 years. But the stock pumped a lot in the midst of a lot of carnage. And I think naturally, if the semis start going up, the hyperscalers take a little bit of a hit. And Apple, I think, is taking that hit. So I wouldn't read too much into the Apple sell-off, but it also was up 8% last week, right, when everything was down. So I think it's kind of just giving some of the back. The 10-year and oil, unfortunately, are spiking up. And I think this is part of the reason for why I'm a little skeptical of stocks right now in the pre-market, because, they look like they're up, but they were up a lot more last night. Like Micron was pushing 935. Now it's barely above 900. It actually went below 900 earlier in the pre-market. So part of the reason is probably because crude oil at 85, which I don't really see the headline for why oil is spiking. I'm sure there's something with Trump and Iran that I maybe missed, and I'll try to see what is going on. Kospi, by the way, was up 14% last night. So you really got some high beta momentum going back into the index that fell, I think about 25% this week. Actually, it ended up 17%. It was the best day it's had in 5 years. So you had a lot of good excitement and momentum. Samsung and SK Hynix were up 25% each. But nonetheless, oil in the 10-year spiking up is not the thing that, not the thing that we want to see. We got Tommy from South Carolina. We got Whiplash from Turkey. We got Uncle Bench from Switzerland. We got Germany, Dallas, Texas in the house. I'll be in Houston in September. I don't think I've ever been to Houston. I've been to Dallas and Austin a bunch of times, but I've never been to Houston. So excited to see Houston. We got Slovakia. We got Baltimore. We got Louisville. Oh, of course. There it is. Iran's IRGC claims it struck 2 oil tankers attempting to pass through the Strait of Hormuz under U.S. military escort. That's your reason, folks. I did not see that in the news flow today, but that is likely your reason for why oil is striking, which means now we see over the weekend if Trump ends up striking back. We got Chad next to his koi pond. I've seen videos of Chad's koi pond, and it is quite amazing, if I say so myself. It is quite incredible to see that pond. We got Maryland, we got Toronto, we got Canada, Switzerland, Germany, Las Vegas. Got a lot of Torontos in the house. Florida. I will not be going to Tanner's meetup, unfortunately. I have family coming from India next week. But yeah, super excited for his meetup, and hopefully people enjoy. Tanner also interviewed Noto last night, which was awesome. I hear he has another big interview coming out this weekend. So excited for that interview as well. We got a bunch of Canadas. We got some Germanys. We have Chels, who says I will not disclose where I'm located. That's a fair point. Ukraine, Alabama, Chicago, Boston, Montreal, Sweden, Singapore. My guy Dexter was at the meetup. Dexter, thank you for being here. Maine, Maui. I love it. Denmark, Sydney. I love it. I love it. I love it. Thank you all for being here. Thank you all for being part of the show. All right, so let's get into it. We got to talk about this Leopold situation. Let's spend some time on this, and then we'll get into all the other earnings we had last night, and then some more in the macro. So you were with me, or if you were with me yesterday live in the market open, you saw the situation break out. You saw it unfold. My reaction to it was that I couldn't believe that it was actually happening, but nonetheless, it did happen. And the reason I really couldn't believe that it was happening is because, once again, this was the kid who was seen as the smartest guy when it comes to AI. And quite frankly, when you buy stocks that are up 2,000% in 2 years on fundamental earnings that you saw were going to happen because of this generational AI wave that was coming and other people didn't, you deserve some credit. The problem is when you get greedy and don't really know how to deal with the financial navigation of what's happening, even if you understand the stock market element of how this is playing out, well, then things can be really bad. So at its core, what happened? Leopold took his assets from 250 million to 45 billion, went 4x levered. Citadel realized that the market was turning. Citadel is the biggest market maker in the world. Ken Griffin basically is trying to become the person that everyone in the financial industry has to cry uncle to when shit goes south. He's done this many times. One famously was in 2007. One was 7 years ago. And, he wants to be the Buffett of this era when it comes to people needing a bailout. Buffett was the Buffett of his era in 2008 when the economy collapsed and all these banks, Goldman Sachs, Bank of America, needed someone to give them a lending hand with some, pretty sharky terms, but at least they would stay solvent. And I think Ken Griffin wants to be that person for this generation. As a result of Leopold stocks going down at the level that they went down, which he was down about 67% in the month of July. So again, he was up 439% year to date into June, but he ended up going down 67% in a month. The problem is because you were levered 4x, a 25-30% drawdown automatically gets you into the liquidation zone. And if you don't have investors that want to put money back into the fund and help keep you solvent, then ultimately you get a margin call. And that margin call means you have to do something with your book. And Ken Griffin, Citadel, Jane Street, Millennium, they're the only people in the world that actually have the amount of capital that allows them to come in and save you and, help you get some level of solvency. But it comes with a discount. And a lot of that discount was likely 40, 50 cents on the dollar. He probably got Bloom at 160, Nebius at 140. And those assets are up 30, 40% from yesterday, which means he's already up on the position. And now Citadel gets to do whatever they want with it. Now, Wall Street Journal reported that situational awareness is still up 80% year to date. That just goes to show you how incredible their performance was across private and public assets, to the point where they got liquidated, margin called. Usually that's a death sentence for a hedge fund. And, you have to tell your investors we're sorry. And, we we lost a lot of your money. In this case, they didn't lose the investors' money. They lost them on paper. But if you're still going to give an 80% return to your investors, maybe it goes to like 60% after fees, that's still beating the majority of hedge funds that are out there. But it could have been 500%. And you could have been able to continue to grow the fund if you were able to risk mitigate, which obviously did not happen. The Financial Times and Wall Street Journal got a copy of the letter that Leopold said to his investors. And one of the quotes from the letters was, "We let you down this month." Obviously still outperforming, but because the entire public book is now gone and we don't know if they're going to get back into the public markets, that's why he said we let you down. The big takeaway from all of this, outside of the craziness of covering it, is that if this was the reason for why these stocks were getting hit, if this was the reason for why Nebius was getting pulled down, it's not like people weren't buying the dip. I think a lot of people were buying the dip at CoreWeave from 130 to 80. A lot of people were buying the dip from Nebius at 298 to 178. A lot of people were buying the dip on Micron from 1250 to 930 or 850. But when those names go down another 20% from being down 30% already, you start to wonder, what's going on? Is the entire thing just going to zero? Does this entire market just not believe in everything that we've been talking about for the past 5 years? Did Kimmy K3 cause the collapse of it? And it's that sounds ridiculous, which it was. And so I think the takeaway from this Leopold story is that what actually happened was a forced structural deleveraging of someone that got way too close to the sun. And as a result of that, ended up getting taken out. And as a result of getting taken out, it led to all of us having to deal with the backlash of that. And obviously the Koreans got hit the worst based on what they had to deal with margin calls. But if that's the reason why it happened, if that's why this all played out, I think that's positive, because that means, well, it's over. And I think that's why the market rebounded as heavy as it did last night. I don't want to officially say that's the reason why it happened. I think a lot of us can feel like that is why it got so ugly. Citadel obviously saying there was going to be a rate hike on Wednesday, causing even more fear, and then more people realizing that Leopold was in trouble, so shorting those stocks to get him out of his positions at the lowest possible price, which created so much pain for us retail investors. It feels like that's what happened. But if there is more behind the scenes, and that's why these stocks really got to recover some of these moving averages over the next coming weeks to prove that this is not a dead cat bounce, then we're going to have to see how that plays out. But it really does feel like it was more structural than not. And hopefully, if it was more structural, then it is going to be over. Here's a couple clips from some people that understood a little bit more about the story and what they had to say about how this ended up happening.
Ken is a very smart guy. He sort of shows up and says, how can I be a partner to the Goldmans and the Bank of Americas when they need to get out, of a really risky position? They basically take over the book, right? So I'll give you sort of an example. You're asking the question. So let's say, you're at 45 billion, to sort of try to trace this back, and you're 10 billion of that is in Anthropic, from what we understood. So you have $30 billion of cash in your bank account. And running 4x lever means you have 120 billion gross market value.
Oh.
So if your GMV drops, 25%, that doesn't sound so bad at 120 billion. Maybe that's, 30 billion. So you're down to 90 billion, but that's not your equity. So your equity drops from 35 billion to 5 billion.
Yeah.
And no prime broker is going to let you keep 90 billion of gross market value, because once you dip your equity below zero, it's their loss, not yours. Mm-hmm. And they're not going to lose a penny after Archegos and after these other kind of blow-ups. And that's not their job. And they kind of have the right to take over your portfolio, mm-hmm. which is sort of, something I hope nobody ever has to experience. But they basically call you in and say, listen, these are our assets now. Yeah. And, we're going to decide what their disposition is going to be.
And so that's kind of what happened. And it's a Wall Street vet in Citadel ultimately determining what's happening with the assets that they now have control over. This is another clip from Thread Guy, who I'm a big fan of. He also does a stream as well. And he had someone on the stream kind of explain a little bit of what was happening and how some of the big banks were interpreting what was going on with situational awareness's approach to actually investing in these AI stocks.
Yeah, so how does this work? So there's traders at the Goldman broker desk, right? At the trade desk. Uh-huh. And, Leopold comes to you and he's like, hey, I just got another $10 billion of cash from Jane Street, or $5 billion of cash from Jane Street and all these guys. I want that 4x, 5x leverage you give me. And I want to buy, $1 billion of Bloom, $1 billion of SanDisk, whatever he bought, right? I mean, he held Bloom, SanDisk, Nebius, all the names that are bouncing today. And Goldman's like, okay, this is pretty fucking crazy. That's fine. We'll take your money. We'll place this bet for you. But the thesis from Leopold and the buy-in, and if you had read his situational awareness essay, was, hey, I think AGI is coming. It's inevitability. Digital God is coming, and these assets are going to be sort of up only in a straight line. And the magnitude of investment and scale needed is like way off in what people are currently forecasting and calculating. Now, Goldman is sitting there and probably thinking, hey, these guys are fucking crazy. Like, this is the stock market. Like, markets go up and down. And then, but it worked. And so Goldman's like, okay, this kid, he's making billions and billions of dollars. And this has happened a lot. A lot of funds have had crazy, crazy run-ups. And then the market starts unwinding and Goldman's like, all right, well, Goldman Sachs doesn't lose money. So they go, okay, now you got a margin call. And now it's like, we need you to post another $5 billion of collateral, not just because markets went down, but also because volatility went up. And so the expected move is no longer.
Like when they give them the margin call, not to cut you off, they're like, the collateral you've given us is no longer sufficient based on how large your position is. You have to give us more money. Or volatility has gone up. Like, price has gone down, volatility has gone up, or both have happened. We don't feel comfortable with how much collateral you've posted.
Yeah, your ops guy gets a call and probably a few emails saying we need to have an urgent conversation. And you look at the market and you say, okay, here's your exposure, here's your portfolio. Hopefully it's not double pledged like Archegos was. That's why Bill Huang went to jail, by the way. It wasn't because he lost money. It was because he borrowed on the same collateral from multiple banks, juicing his leverage, 2 to 3 times what other people thought. And so essentially, like, Goldman comes to you and they say, hey, we're really worried about the exposure here. We need you to post additional collateral. Leopold is like, well, fuck, I don't have the collateral. So that's why that news came out that, hey, he's raising funds. You're not raising funds when the market's going down because you're having a good time. You're raising funds because you have a liquidity crunch or a call, and you presumably don't want to sell your assets, because when you sell your assets and the market's moving against you, it exacerbates the move. Yep. Because now all of these very sophisticated trading firms see you selling and they're like, oh, this guy is liquidating. Let me quote even wider, right? Let me try and front run this guy and short, because this guy has a huge position to unwind, right? You get stuck. And so
this is what happened over the past week when all these stocks were going down. Citadel understood that Leopold was going to have to liquidate. The other funds started realizing that there was some fund out there that needed to liquidate. They might not have known it was situational awareness, but they understood like things were getting iffy. And then once it became very clear, this was probably around Tuesday, Wednesday. And I think what, really made it obvious to people was the Citadel surprise hike FUD that they put out. I think that was a signal to everybody like, oh, Citadel starts smelling the blood. And then all these other funds are like, wait a second, if that fund's going out of business, we can make a lot of money shorting at least for the next 24 hours, because they're going to have to sell into the weakness. They're going to have to unwind the position. And then you've got this macro scary boogeyman rate hike backdrop that Citadel just created for everybody. Boom, perfect situation. Let's do it. Let's short and let's take this guy out. And basically that's effectively what happened. And Citadel made sure to make that happen.
Well, I mean, look, if I'm buying a house, I'm not going to talk about any of the positives of the house. I'm going to try and argue a case for why my price is fair. Oh, I heard gunshots in the neighborhood, and the fence is a little messed up. And, there might be some structural issues. Like, you're going to say everything possible to drive the market down. I mean, this is the same thing Ackman did, where, he went on CNBC and he was
COVID was crying.
Yeah. And he was, talking about how disastrous COVID is going to be. And then in the meantime, he was actually covering his shorts and flipping long. Like, there's nothing, like, is it a little bit shisty? Sure. But like, okay, if I know that a fund is stuck and I know that someone's leveraged and I have the size to do it, like, why wouldn't you press the market down?
Wow.
Because they're going to be far more agreeable when Goldman is about to say, listen, we can dump this into the market. And they go, no. Like, let's find a bidder and let's get this cleanly off our books and go. I mean, Goldman would never really dump it out of the market. That would incur quite a bit of losses. But I mean, listen, like, Ken is not a nice guy. You don't make $50 billion by like having the best interest. I mean, more probably 80, 100 billion. You don't become the GOAT by like not sharking people.
Well, speaking of Ken, I found a clip from him last night. Here's what he said about how people become unsuccessful at Citadel.
When you join the firm as a new portfolio manager.
When do you sack me?
Well, let's be clear. We don't want to sack you. We want to see you have an incredibly successful career. Why do people's careers derail? Why do people run into tough predicaments? There's a couple of reasons. Number one is some people, just to be blunt, they're just not good risk takers. You can put the facts right in front of their face. You have a portfolio that is extraordinarily highly concentrated. Your large positions, you cannot demonstrate a clear and concise competitive advantage in why you own those positions. If these go awry, we don't have a basis to work together. And there are some people that just with full information are unable to help themselves. Look, I think there's something that we do that's very different than most firms. Everyone agrees that there's an art to investing.
He goes on to say that you need to learn how to be able to manage your risk, which obviously this Leopold guy wasn't able to do because he was winning so much. And, you know, I think most people realize that he got ahead of himself by feeling like he was probably the smartest person in the world. But unfortunately, that's not how it played out. And in fact, it's kind of crazy because Leopold mentioned in the only interview he's ever done back in 2024 that his only objective when becoming a hedge fund manager was to make sure not to blow up, which unfortunately ended up happening, even though he still made, you know, a good chunk of money.
Yeah, I mean, look, obviously you can't, you know, not blowing up is sort of like, you know, task number 1 and 2 or whatever. I mean, you know, I think this investment firm is going to just be betting on AGI, you know, betting on AGI and superintelligence before the decade is out, taking that seriously, making the bets you would make, you know, if you took that seriously. So, you know, I think if that's wrong, you know, firm is not going to do that well. The thing you have to be resistant to is like, you have to be able to resist to get, you know, one or a couple or a few kind of individual calls, right? You know, it's like AI stagnates for a year because of the data wall, or like, you know, you got the call wrong on like when revenue would go up. And so anyway, that's pretty critical. You have to get timing right.
And he did get timing right. He got the timing right on when these stocks would end up seeing those S-curves of growth. And he got in right before it happened, but he got the timing wrong when he needed to delever. Forget even selling positions, just like getting out of the leverage. He didn't have to sell his initial cost basis because that was so small compared to the leverage that he had, but he needed to get out of the leverage. And he was up so much that like theoretically you would assume that, you know, you should be able to get out of the leverage. And you needed to understand how financial markets work, which is that stocks go up and down. So you could bet that AGI is going to go up in a straight line and that it's just going to be up and up and up. And we need more compute, more spending, yada, yada. But these are financial markets. If Trump says something or Iran strikes some vessels, which they did this morning, which is why oil is up, stocks are going to go down. Like the AGI thesis is going to be in question because the 10-year bond yield is going higher, which is why all this stuff in the macro we talk about so much, Amazon right there up 11.5%. And it matters because at the end of the day, stocks are not just rooted in the earnings and free cash flow multiples that the market wants to put on them. And it's rooted in so many other external variables. And those variables ended up taking a hit here for Leopold. So absolutely crazy story. It's one of those things that I think will be talked about for a long time. You know, I don't think Leopold's career is over. The guy's incredibly smart, still has 10 billion of assets. He's probably going to be back eventually. But this was one of those situations where the vet on Wall Street came in and ended up doing what needed to be done to get the leverage out of the system. And ultimately, something that was done in a very opportunistic way. And as a result, it might have marked the bottom for all of us in this stock market. And hopefully we can continue to see it. Inder, thank you for the super chat, bro. Longtime follower, first time message. My son, Rian, is keen to say hi. Rian, thank you for watching the show with your pops. Appreciate you being here and appreciate you being part of the community as we keep up with the markets every single day. All right, Amazon, let's get into it. Then we'll talk about Reddit and some of these other stocks that are getting hit right here. So Amazon's up 11%. This was a perfect quarter by Amazon. This was a perfect quarter by Amazon. I listened to the call last night. A lot of you were there with us on the market close. I mean, Amazon said a couple things that were really impressive. I think the biggest thing outside of the increase of CapEx from 220 or 200 billion to 220 billion, the bigger thing from it's going to go up in 2027, the bigger thing that Jas, you said outside of the demand in 2028 is oily piling in. The bigger thing from 470 billion in RPO, which is now about 2.2 trillion across Oracle, Microsoft, Amazon, Google in remaining performance obligations is we think AWS will be $1 trillion per year business. It's the first time, at least I've heard, Jassy actually say that. And if that's the case, Google and Microsoft are going to want to make their cloud computing businesses at least either close to $1 trillion or in that $1 trillion range per year. If they're going to be generating $1 trillion per year in revenue from cloud computing, by the way, they'll probably get to $1 trillion of revenue in the next couple of years just in terms of the overall e-commerce business. By the way, the Amazon operating margins that were 5% a year and a half ago are now 13.7%. They don't make a lot of money off selling water bottles and random stuff from China, but overall, if those margins start to continue going higher and they do start to get more efficient, so they can inch out a little bit of a profit from the actual e-com business, their operating margins on AWS are 39.7%. They also beat the street expectations. They grew 37%. Street wanted 32. Whisper numbers were 36. So AWS absolutely crushed expectations. The margins on that are leading down to the bottom line, even though they are free cash flow negative, but I think the street kind of expected that, so they didn't care. And then the legacy e-com business is starting to get a better operating margin, which is why, you know, if they start generating trillions in revenue from people just buying stuff on Amazon and they can bring that to the bottom line, this is going to be a cash printing machine. But if they're going to be getting $1 trillion per year from AWS, I mean, they're going to have to spend a lot of money on compute, right? Like, I think that's why Micron's up and SanDisk is up and Bloom is up. It's like all these companies, it goes back to that same thesis that has been articulated for the past 6 months, that if AGI is coming and you need compute in order to make AGI real, and you need all these little parts of the infrastructure to allow that compute thesis to play out in order to generate the revenue from AGI, which in the most purest sense is this, you know, cloud computing revenue with managing these AI workloads, because as the workloads increase, you need more cloud computing, which is why theoretically Meta really should be doubling down on this, and they're not, which is why I think the street's upset about Meta. Then the picks and shovels plays are probably going to have more and more money going into them. Now, I think the reason the market is still upset here, Google's up 1% as well, is because the sustainability of the picks and shovels plays. By the way, AXTI, Photonics play 44% right here in the pre-market. They demolished earnings as well. Very good for AAOI and all those Photonics names. It was up 26% yesterday during market hours. So obviously the market is getting more excited about that. Is that how long is the CapEx cycle going to go, right? Because if the CapEx cycle ends by 2028, then the money flowing from the CapEx spenders to the CapEx beneficiaries is theoretically going to top out before that. And that's going to be an issue for the earnings. The difference here is what I heard on Amazon's call was that it doesn't feel like the CapEx is stopping anytime soon. And I know, you know, every time we hear one of these earnings calls, the obvious takeaway is the CapEx is not stopping anytime soon. But if you really heard Jassy explain the vision for where the ROI is coming from, it doesn't seem like the CapEx is not ending soon. It more so seems like the CapEx has no chance to end anytime soon, especially given how Jassy was talking about the life cycle of the GPUs that they're getting and the depreciation that they're running against the life cycle of the value they're getting from even previous models outside of the GB300, which goes to make the argument that we should have the ability for semiconductors, hyperscalers, fintechs, and software stocks to all move up at once. I know we've been in this yin and yang where, you know, the software names move down if the semiconductor stocks move up because it's been a traditional short. But if that was what the Leopold strategy was, which we know for a fact it was, by the way, because when Ken Griffin took over his book, he inherited a book of long semis and short software. So if Leopold was shorting the software names to be able to add fuel to the fire for his semi-longs, I'm pretty sure a dozen other funds were doing the exact same thing. If that strategy is over with because the market's just like, yeah, we don't really need to take Palantir and Microsoft and ServiceNow, by the way, Microsoft's still holding 450 is incredible, or any of these software names down because they're not going to be dead due to Anthropic, then why can't everything go up together? Why can't we actually have the hyperscalers go up because they're seeing an ROI? Why can't we have Micron go up because they're getting the capital from the Amazons of the world to produce memory, which is in a tight crunch? Why can't the Palantirs go up because they are using the models, which you need Amazon compute to be able to run them on, and you need Micron's chips to be in the GPUs in the data centers to be able to allow the memory inside of those models to help understand the contextual workflows of an enterprise deployed on Foundry? Why can't that go up as well? Why can't we have the entire economy participate, with the stock market being the representation of that economy and all different levels of the stack? It feels like after listening to Amazon's call, and maybe I'm being too optimistic, that should be able to happen. And I think the fact that the street's not tanking Amazon on these CapEx numbers means that the street is now believing that Amazon should be able to potentially do it. And so as a result of that, it would be very exciting to see the entire market participate and not be in this game that we've been in for so long. And maybe Leopold getting liquidated is part of the reason for why that's happening. Did Palantir just get that wick? That just came, yeah, I think that just came in. That wasn't me, guys. I was using it as an example. But there you go, up 1.25%. Hopefully we can get back into the 130s. We got Palantir on Monday. I think Carp's going to crush it. We just need this whole software narrative thing to go away. And you know, if they bring in like 90, 95% growth, I think the street expectation is like around 80 to 85, then obviously that would be very exciting. So overall, I think Amazon did great. I'm feeling a lot more optimistic on the market. I don't think it's crazy that if you didn't get CoreWeave at $58, you don't have to be excited about it at 77. This was a stock that was at 130. You have price targets across the board into the 200s. So not getting the absolute bottom on a day where there was a lot of uncertainty and fear. The other thing about what was happening on Wednesday is that it was hard to catch the falling knife because we didn't know what was happening. Now that we realized it was a structural deleveraging event and it wasn't like something that was breaking in the entire system in terms of the AI trade, I think these names don't have to get back to those levels because, again, that structural deleverage is over, which means they're probably, and I hope I'm not wrong on this, but they're probably not falling knives anymore. And if they're not falling knives anymore, then yeah, you're not going to get the absolute bottom, but at least you're having a lot more certainty for why you're buying these names, which means you have to pay a higher price. It is what it is. But again, if you believe in that broader AI thesis, then paying that higher price is not going to be that big of a deal because they're still down. CoreWeave is still down 40% from the highs. So yeah, you didn't get it down 60%, but you're getting it down 40%. It's not the worst thing in the world. And by the way, this just shows how much retail was panicking. From Monday to Wednesday, retail sold $643 million of stock in 3 days. It's the highest pace or the fastest pace in history by which retail investors dump stocks. And so obviously people got scared of what was happening. By the way, Michael Burry has added to his shorts on Micron, added to his shorts on the QQQ, added to his shorts on SMH, and added to his shorts on Nvidia. So yes, basis points will be out tonight. We talked about the entire Leopold situation and all the earnings that we had this week. Burry basically said last night it's a dead cat bounce. And look, maybe there's a world in which it's a dead cat bounce, but if we're being honest, like if this was a Leopold situation that caused the scrutiny of the pain, and again, maybe I'm wrong, maybe it wasn't just Leopold, but if that was the reason, it's not like these stocks can't go down another 5-10%, but I don't know if they're going down another 30%, which is where they were on Wednesday. And so we're gonna have to see. But if Burry closed his shorts on Wednesday, he would have made a lot of money because he shorted Micron at 1,000, shorted Nvidia at like, I don't know. Honestly, he would have made a lot of money on Nvidia. I don't think he shorted Nvidia at like 220. He's been short Nvidia he's actually, I think, down on Nvidia. He's been short Nvidia for since it was at 180. But you definitely would have made money on Micron. His semis puts are probably not in the money because he started shorting them in April, but they at least started recovering a lot. So, I mean, he could have at least deleveraged some of those positions on a drawdown. If that was the drawdown, now maybe he wouldn't have made a ton of profit, but he would have at least, recovered a decent amount of losses because he was down a lot in June. If he thinks it's going down even further from here because he's adding to the positions, then that means he thinks he's going to be in the money. And by the way, his strike is December 26 and January 2027. So he thinks it's happening in the next 5 months. And if it is happening in the next 5 months, then, we're going to see how this ends up playing out. But it does feel like that structural deleveraging hopefully marked most of the pain that we had to experience. All right, Reddit. So everything on it was good on Reddit. 61% year over year on revenue, EPS 178%, adjusted EBITDA 106%. Like you can't see those top line numbers and see how they beat the consensus analysts every time in terms of the estimates for the past year and a half and be like, this stock deserves to be down 16%. So why is it down 16%? They also bought back 1.5 million shares. I mean, just like everything you could ask for was strong. The reason I think they're down is for two things. Number one, from my understanding, they didn't have any clarity on the data licensing deal, which for some reason, the market cares so much about what they're going to do with licensing their data to these AI LLM companies, which I think is an opportunity. I'm probably buying the dip today on Reddit. You don't see that type of earnings and then say, because they didn't give clarity on licensing their data, which they didn't need to do that to get the earnings to go up. And I am sure there's an OpenAI or an Anthropic or a Google or a Meta that's out there that would pay more than 60 million measly dollars, which in the age of AI, content, authentic, human-generated, real personalities that allows to train the model, those get a premium. It'll probably be worth more than 60 million. So if that's the reason the stock's down 16%, that's crazy to me. And I think, when you see a growth stock trading at a very reasonable multiple, putting up these numbers and have an external reason for why that's down, it doesn't make the most sense. The other thing is that their monthly active users in the US declined Q over Q. I'm going to try to get the exact number on that, but because of that decline Q over Q, in North America in particular, which is their highest ARPU engager, that's why the street was upset. So it went from, and by the way, for those who want to know the decline for why we've lost almost 20% of the company's value right here. Yeah, the 4P is about to be 22%. The 4P is about to be 22 at the open for a company that's going to CAGR EPS 30% for the next 4 years. They just beat EPS by 178%. and they grew revenue 70%. Like, in my opinion, it's a buy, and I'm likely buying more today. They missed by 300,000 people. So in Q1, they had 53.5. Q2, they had 53.2. That's what the street is upset about. Okay, if that's what the street wants to be upset about, then that is fine. So it is what it is. Reddit was at 142 around May 31st, Memorial Day. That's when I first bought it. So obviously very close to my average here. And so if it wants to be in the 140s, then give it to me in the 140s. But I don't think there's some glaring red flag. Now, maybe there's something I haven't seen in the quarter because I haven't gone through every little part of it. But if that's the big reason, then, if it takes it down that much further, then we'll have to see what's going on. But I don't think it's been the worst quarter. Marvell right there, that's up 7%. Credo, that is up 6%. AXTI, again, that's up 70% from yesterday. Oracle. Now, AXTI also is a very small market cap. So here's another question I have for everybody. We got 8 minutes until the market opens. AXTI, kind of the poster child of this AI meltdown. This stock was at $150 at the top, photonics play, during the June momentum. It got all the way down to like 30, so 145 to 30, pretty big drawdown in a month. Now it's at 60 in the pre-market, up 70% in the past 2 days. This was one of the names that a lot of people took out a lot of leverage to buy and obviously got hit on pretty badly. Small market cap, small float can, easily go up or down. Do we think that people take leverage and get back into these small names if the market starts going bullish again? Or do we think a lot of people learn their lesson and they don't want to experience and stomach the volatility again? Doesn't mean they're not going to buy the stock, but maybe they're going to be more careful with taking out margin loans to be able to buy these tiny stocks that, for whatever reason can go up or down 40, 50%, which is great on the upside, but obviously it's gut wrenching on the downside. I'm curious what people think about that. I kind of think if we get back to being a super bull market, people are going to just take out more leverage and we're going to be stuck in this. Like, some people will probably be like, I don't want to experience that again. But I think a lot of people will be like, you know what? Screw it. Like, I bet you a bunch of South Koreans called their brokers last night when the Kospi was up 17%. And we're like, yeah, better give me back my margin loans. I'm back above my solvency. I have all the assets I need to qualify for a loan again. I mean, like, because when you get a 17% move in the index, if you were underwater, if you were about to go insolvent, if you were about to get a margin call, and boom, your line of credit just got extended because your assets that you're getting a line of credit around just went up 18%. All right, you can borrow more money now. So it's one of those things where we're gonna have to really see how it plays out. And I don't think it's healthy, but at least we got a decent amount of leverage kind of wiped out of the system. All right, U.S. Treasury, just getting a headline right here, has informed banks that it may intervene in the yen market on Friday. U.S. Treasury told a number of banks via New York Fed that the banks should stand by for future actions. I think we saw this happening because the dollar is declining substantially versus the yen. We saw that yesterday. It went down 3%, right? Yeah, it's still down at that 159 level. It was at 163. I don't know what this is going to mean for stocks. Theoretically, it might potentially hurt them if the U.S. is going to buy up a ton of yen right here, but we're going to have to see how this plays out. Yesterday, I know people were talking about yen carry trade didn't really affect the markets, but then again, I think the markets were so obsessed with this Leopold story that everything started rallying once they realized that the Leopold situation was over with. But the yen is obviously strengthening pretty dramatically towards the dollar, and that might be part of the reason why the U.S. is trying to intervene right here. Amazon, 12.5%, 265. I mean, 12% on a $2.5 trillion company is freaking massive, but it will be exciting to see how this ends up playing out. Did Wall Street stop being greedy after 2008? That's a good point. It's just in 2008, retail wasn't really part of the markets. Now retail is, and you have access to leverage so easily as a retail investor. So I wonder if that changes anything. Nvidia right there, that's up 1.5%, 198. So the Iran news this morning, IRGC said the tankers were escorted by U.S. military aircraft and proceeded despite repeated warnings, so they struck them. U.S. Central Command said it had redirected 20 commercial vessels, stopped 2 and boarded 2 in the area. Despite that, Iran asserted sole authority over the route of Hormuz and said it struck 2 oil tankers for unauthorized routes in the strait. So that is why oil is spiking up right here, and we're going to have to see if stocks ultimately reflect this. I really don't get why Hood's down. I don't know if there's something I'm missing from the earnings. It's actually very weird. The semis are rallying and Hood is down. And like Hood should really like that the semis are rallying because that means people are taking out more margin. That means people are trading more. So I do not get why Hood is down from the earnings, but I thought the earnings were incredible. And so, unfortunately, we're seeing that pain continue on that one. D-Wave, that's up a little bit. NVIDIA, that's up 1.5 per Tuesday. NVIDIA needs to be $200 again. Like, this is getting kind of stupid. With all the Max 7 saying how much they're spending on CapEx, like, the fact that NVIDIA is not meaningfully above 200, minimum, like 205, if not 210, 215, is weird. And so a spike up there would not surprise me. I would hope we get there. The software names are obviously down in the pre-market because we have this game between semis and software. Figma, Adobe, Zeta, Shopify, all losing their weekly gains because of the semis rallying. SK Hynix is up 7%. Iren's up 7%. And so I don't know when this game stops between these sectors, but that's what's playing out. Again, in terms of Apple, good quarter, beat all their numbers, missed on very small metrics in China and services. I don't think it deserves to be down 8%, but also I really didn't think Apple deserved to get to 340. I don't know if anyone did. I could understand why Apple was going to 340. Everything, the world was crashing, and so you go buy Apple. But when the world's not crashing anymore, same thing around Verizon and Coca-Cola. Like, these names really, they were not the blockbuster buys that everyone needs to own. They were just the names that needed to be there, which is why they're down today. As the high beta trade comes back. And the high beta trade, one could argue, is way more sustainable in terms of earnings growth and sentiment, even though it has its peaks and valleys, than people being super excited to buy Verizon and Coca-Cola. And those are great companies that will pay a dividend and do well over the years. But just like in the short term, whenever those names spike up 10, 11%, those names aren't that volatile. They shouldn't be going up that much. It's obviously a rotation because people are scared. And when people lose their fear, they kind of come right back in. And so I think that's what we might be seeing right here. Google should also get back to 350. If Amazon's going to go up 12%, Google should go up because they didn't say anything different from Amazon. And so I would imagine that the market would be happy that the CapEx is flowing through, and then you're seeing a earnings result. Coinbase is down because Bitcoin went down in the quarter, so all their trading volumes were down. Again, this is why I've always loved Robinhood more than Coinbase. I just think there's a little deeper story in terms of their financial services product. But yeah, Bitcoin trading volumes were down. That's why Coinbase was down. Sipping, thank you for the super chat. What I want to know is who will play Amit in the situational awareness movie. Retail investors need representation in the movie. It has been kind of crazy chronicling the story. It is why I say Wall Street is the greatest show on earth. And yeah, I don't know if there will actually be a documentary or movie about it, because at the end of the day, I don't know if it's as big as, like, he didn't fraud anybody like Sam Bankman-Fried. The market collapsed for like a month, but I don't know. It wasn't like some massive, massive collapse. Hopefully that doesn't continue. So it's like one of those things where he broke the markets for a few weeks. I don't know if it's enough to make a documentary on it, especially because the fund still has $10 billion in assets and he's still investing in privates. But it is a hell of a story. That's been crazy that we've had to follow it at this level. All right, 20 seconds. Thank you, everybody, for being here. It has been a crazy, crazy week. I deeply, deeply appreciate everyone trusting me as the messenger and communicator of trying to analyze all the craziness that has been happening. It is Friday. Happy Friday. Thank you all for being here. Refute the mute for a crazy week. Friday, July 31st, the stock market is now open. All right, wake your ass up. Let's get into it. The S&P 500 opens with some green candles, some very green candles, if I say so myself. Look at that go. Look at her go. I really hope NVIDIA participates in this. Of course, NVIDIA gets a red candle at the open. Why not? But Apple, that's down 8%. Robinhood, that's down 1%. CoreWeave's up 5%. Amazon, 12%. Let's see if Amazon can actually break through 270. It did get up to 277 last time after earnings. Reddit, this feels kind of stupid. I will be buying more today. This doesn't make sense to me, but 18% down on the open. Roblox, unfortunately, they missed their daily active users by about 5 million. That's why that's down 18%. Reddit missed it by 300,000, and that was only in North America, still down as much as Roblox. So again, a bit confusing to me, but nonetheless, those stocks are down. Meta, that's up 2%. Looks like Amazon is helping the Mag 7. SanDisk, that's up 8%. Micron, that's up 5%. Bloom Energy, 160 to 232. That's up 12%. Monolithic Power, they crushed earnings. That's up 15%. Nabesis, we are back with a 2 handle on Nabesis. I think Nebius and CoreWeave are obviously two of the biggest neoclouds that a lot of people own right here. And many, including myself, 170 to that 190 range was kind of the dip buy. After it fell below 170, it just kind of got egregious. So looks like at least it is breaking even and starting to slightly go positive for most people. 200 right there on Nebius. Tesla, we didn't get to talk about the Tesla story, but we'll talk about that. Elon confirmed it was false, but it's a very weird story. And I know Elon said it was false, but however the story ended up becoming real, even though it was false, makes me think that there is some more truth to the story than not. And so we'll talk about that in a bit. Rocket Lab, that's up 4%. Broadcom, that's up 2.3%. Oracle, 130 from 114. This one getting some love. If there's going to be a lot of cloud computing from Amazon, there's also going to be a lot of cloud computing from Oracle. IREM, that's up 4%. The Qs are up 1.48. Qs trying to get back up to 700, which would be very good psychologically to see. Cheesecake Factory, that's back above 100. Amcor, 5181, up 7%. Fastly, that's up 1.16. NVIDIA trying to get back into that 198 range. Where is Palantir? Red, unfortunately, because software is red. Robinhood just flipped green. Apple down 10, I think is aggressive. I think Apple was, around 310, 315, I thought was enough pain, but this is now at 302. Let's see if it actually loses 300 and see what the street's upset about. Reddit continues to fall down 17% as that one continues to take the hit. Micron is at 930. After this pump, we're still far from all-time highs. That is fair, but I think for us to get back to all-time highs, it might be the kind of stair step up, just like the stair step down that we took to get to those all-time highs. So, maybe Micron 1250 doesn't happen tomorrow, but if it happens in a few months, then it's not the worst thing in the world. I think the most important thing is just we need to recover moving averages. We need to get above certain levels. Like NVIDIA needs to meaningfully get above 210 realistically. Micron, I think, needs to at least get back above 1,000 and stay there. TSM, this one doing incredible. TSM was 480 at the top, went down to 360, now at 417. I think TSM around 435, normalizing at that level. AMD, I think AMD is doing great. I mean, AMD was about to go below 400. I don't think it needs to go to like 550 or 580. If you can just stay in this 510, 520 range, and not, budge below that, that would be incredible. So I do think some of these levels, Intel definitely needs to get back above 100, are being more respected. It's only been a day and a half, but it would be nice to see. Grab right there. We got earnings on Monday for them. That's up 0.29%. Visa and MasterCard are both down on the day. And A-Lab, all those other names continue to be up. I don't understand genuinely how someone can be bearish the CapEx cycle right now. I think it's important to understand both perspectives on what could stop CapEx, what could encourage CapEx to continue. But after really listening to Amazon's call and listening to Jassie's intentions, now that doesn't mean you have to buy the CapEx beneficiaries, right? Because buying the CapEx stocks is a different question from being bearish on CapEx. But I don't think the CapEx is stopping. It's just, you had all the Mag 7 report, even Tesla, which, is not even compounding earnings, saying we are significantly going to be increasing our CapEx. And so I don't know if that means Marvell is cheap. It definitely wasn't cheap at 330. I don't know if it's cheap at 200, but I understand why the street's giving it the nod right here because the CapEx is going up. Now, just because the CapEx is going up doesn't mean those names have to be bought, but it definitely means that you have to be able to analyze the CapEx beneficiaries from a lens of, hey, maybe we can't discount their cash flows because the CapEx is going to be stopping soon. We have to wait a bit, or we have to apply a lower discount rate in our models because the CapEx will continue. And I think if all the Mag 7 continue to make the case that there is an ROI and the market's actually believing it because Amazon, there you go, is up 14% off increasing by 20 billion. I don't know if it's as big of a bear case anymore. NVIDIA, did we get 200? Did we get it? No, we didn't get it. Why are you guys saying NVIDIA 200? We didn't get it yet. We got 15 cents. Oh, there it is. There it is. Okay. You guys are a little early. There it goes. 200 on Mr. NVIDIA. Now, can we just please stay above it? Wow, we touched 200, then we went down 50 cents. What is up with 200? Why is it such a big form of resistance, dude? It just loves living below 200. It's like, I can understand 205, 210, you could be below 220, but like below 200 is stupid on NVIDIA. It does not make sense when you look at these earnings. And you can't even say it's that big of a company. It's like, oh, it's still under 5 trillion. Like Apple got to be above it this week, and Apple's not growing earnings like NVIDIA. And the sustainability of Apple's earnings is not guaranteed. I mean, they better have some really good new phones coming out. They better really show their, yes, people will always buy Apple products, but we saw for the past 4 years what happened when people didn't want to upgrade their phone. We know for the next few years, people will have to upgrade their GPUs if this AI revolution will continue to be what it is. So like NVIDIA just makes so much more sense here. 200.09, but now back to 199.7. Hopefully we get a close above 200. Reddit's down 16%. All right, I'm buying Reddit right here. We're buying Reddit. This is stupid. This is stupid. Okay, Reddit. We're going to start off with 50 shares, and we'll do another 50 by the end of the day if it actually continues to get hit. Okay, I'm in Reddit 147.15. 147.15 on Mr. Reddit. 50 shares. Let's add to the stack 147.49. That is down 17%. I think it hit 145 at the low. So, or sorry, 143.87. So I'll be looking for 140. I'll be looking for below 143 today to buy the dip on this. Again, simple thesis. They grew EPS by 178%, revenue by 70%. Stock is trading at 22 times forward, and it's down because they missed on 300,000 users in North America. I don't get it. It's basically at my cost basis from May. So that is the buy. SMH right there, 557. That's up 3.39%. By the way, SMH had its best day since April of 2025. SMH had its best day since April of 2025 yesterday. So it was, April of 2025 was huge for the tariff recovery. The fact that the semis had their best day in a year and a half just goes to show you how aggressive the rally was yesterday and what we were seeing right here. Where is SpaceX? And we'll talk about that Elon story. SpaceX 111, that continues to go down. I don't think someone said, will SpaceX participate with the semis? I think because of the share unlocks, unfortunately, SpaceX is not going to participate with the semis if they continue to rally aggressively. Micron right there at 920. But time will tell when those share unlocks go through. Tesla 313. That is up 1.3% right now. Again, a lot of these names that are up right now are up after yesterday's pump. So them giving back some of the gains and going red today would not be surprising. I just don't want them to give back a majority of the gains from yesterday, because then you start to wonder, was it really a dead cat bounce, right? And so we've got to think. If the semis do dump, Reddit's probably going to get a natural bump up because it's a software stock. So it's already down so much. We're going to see if the semis have any weakness, if that helps any of the software names. But yeah, I don't know. Does Nebius actually bust through 200 right here? Or is that a form of resistance now? Nebius getting some red candles, 191, as that's up barely 1%. Can today flip to red? Yeah, absolutely. Again, the pre-market, I woke up pretty early and stocks were up a lot. And as the morning kept going on, stocks started going down a decent chunk. So if you just woke up like 30 minutes before the market opened, it looked like pre-markets were green, but they were actually pretty red from where they were at like 5 or 6 a.m. And so that started to wonder, why are they selling off? And then you see the oil news, the Iran news. It's like, okay, there might be something that's happening. Or just, general sentiment is not as excited given the move that we already saw yesterday. ServiceNow just flipped green. Microsoft 460. Amazon and Microsoft, though, those are the stories today. And Google. It's the Max 7. I mean, look at this. 268, 14%. Amazon now very close to a $3 trillion market cap. This 10-year is a little scary as well. I don't know why we're at 4.7. I mean, obviously the oil prices going up is bad. We're actually above 4.7, folks. We're at 4.72. And the what do you call it? The yen intervention that the U.S. Treasury is planning to do, that's probably also affecting the 10-year. But like the fact that we're actually up today on a 4.72 10-year, for context, we topped out at 4.8 back in April of last year, and the markets were down very badly. And it wasn't just the semis, it was the entire market. So I don't know how we're flirting with 4.8 right now. But if we flip red, if that ticks further, that would be, I think, your basic reason for why that could be playing out. A lot of people asking, was Tom Lee right? Once again, Tom Lee said we would get a 15 to 20% drawdown on the S&P 500. We've gotten less than a 3% drawdown from the highs. If you want to be generous and say it was from a different level, then okay, I'll give you 5%. But I mean, I still, as bad as July was, I still am on the other side of his thesis that we're going to have some that's going to 6,500 on the S&P. Like July was pretty bad, unless there's something deeper than the situational awareness blow up, which maybe there might be. I don't really know. I think we can see another 3-4% down on the S&P in August, because August tends to be a horrible month for stocks. Like, I know it's not good news, but it is what it is. I don't see us going to like 6,500, 6,700. Now, if we do, it will probably be one of the best opportunities to buy, because we're going to have, like, Amazon would be like $170 of that. Like, you wouldn't be able to stop the selling at that point if the actual index gets taken out that hard. And then October probably is your midterm bottom. Still is a midterm year, which is one of those things we got to remember, but I don't know if it gets that bad. I don't know if it gets that bad. I do think that Clarity Act's not happening. Based on what I've been reading, it's not happening. I mean, August 7th was supposed to be the deadline. You're about to get an August recess for Congress. I do not think that's happening. By the way, Trump is hosting a cabinet meeting today at 11 a.m. So that's something that will also probably keep the markets a little jittery based on what he has to say. Manuel says, I feel like this is the that's when they get you moment that Jason was talking about. It very well could be. It very well could be. It could be one of those moments where you start to see momentum and then you get hit at resistance and then you flirt with it for a couple of days and then boom, you go right back down. The qualitative reason for why that might not be the case is because, you know, that's the falling knife theory that a lot of us thought was happening based on the market hating AI, right? And the market questioning the very fundamentals of AI. If it wasn't that, if it was a deleveraging event which forced people to sell, then that's not the case. And so theoretically that could happen, but it shouldn't. But then again, you know, maybe there was a lot more than this Leopold situation for why things fell down. And we got to be ready for that as Nebius gets potentially ready to lose its gains for the day. Lots of candles on the semis going down. Again, this is exactly what happened in the pre-market. If you were watching the pre-market, and if you're wondering why Reddit's about to hit 150, it's because Micron's about to hit 890. I mean, it's a game. It's literally a game with software and semis. Reddit almost at 149.50. Verizon, that's down 1%. Robinhood's up a little bit. CoreWeave losing a lot of its momentum as well. Why service now up? Well, the algos are sensing that semis might be getting ready to go down. Like, it really is hilarious. But at this point, it's happening almost every day when we analyze this stuff and we see how these prices go back and forth. Amazon's still 265. Okay, let's talk about Tesla. So the article last night from the Wall Street Journal came out and said, and I couldn't believe this when I saw this. I was like, what? I was like, this makes no sense. It kind of does make sense, but this is absolutely just something I didn't expect. Wall Street Journal said Tesla is trying to split their China business before the SpaceX deal. Advisors have discussed a spinoff, sale, or closure, while executives have been told to prepare for a potential separation. A standalone China unit would create a regulatory firewall between Tesla and SpaceX, a major U.S. defense contractor, addressing concerns over Chinese customer data. The problem is China accounted for 18% of Tesla sales in the first 6 months of 2026 and houses two major Shanghai factories. SpaceX generated 21% of its business in 2025 from the U.S. government. So obviously this merger is going to happen. There's no doubt in my mind that the Tesla-SpaceX merger is happening. In fact, the conspiracy is that Elon's trying to tank Tesla so he can buy Tesla on the cheap, which sucks for Tesla shareholders, but long-term is probably part of his deeper vision. But you can't combine a major defense contractor with Tesla if you have this Chinese part of the business. Now, Elon came out yesterday and said it was fake, which, okay, if you take Elon at his word, that's fake. But it begs the question, and it's a question honestly I haven't thought about for a while, how would you merge the two companies if you didn't get rid of the China business? So Elon can say it's fake because maybe they're not thinking of doing it right now, but logically, I don't think the FTC would allow one of the most important defense contractors in the United States to merge with a company that has a massive part of China infiltrating its business. So it kind of seems logical, like you would eventually have to split off the China business as a separate entity. And I don't know if the market likes that or hates that or would like or hate it. But that's why Tesla popped last night up to 325. And I don't think it even popped because of the Wall Street Journal thing. It popped because of the idea of the merger. And like this was like a missing piece of the merger that if, you know, the media was reporting on, it seems like the merger is closer to happening versus like the actual China separation. But obviously Elon said it was fake, and you know, Elon might want Tesla to not go up because again, he wants to buy it at a cheaper price. So it's one of those things where I don't know. If you're in Tesla and SpaceX, you're going to have to just deal with the inevitability of the merger and also the rumors over the coming years of when that merger will happen. Microsoft right there, 457, as that continues to go green. Yes, we did talk about Amazon on basis points tonight, Suraj. Thank you for the super chat. We talked about Amazon, Microsoft, Meta, and the Leopold situation. That was the majority of what we discussed last night. And yeah, you guys will see that tonight when it goes out. And I mean, Look, I thought the Leopold thing was crazy. Steve thought it was less crazy because Steve was like, this is just another person who got liquidated. It happens all the time. And I'm like, yeah, that's fair. You know, he's been around Wall Street longer than I have, so he's probably seen these cycles many more times before me. But I just thought how it played out with Citadel and like, you know, them literally creating the condition to like put the knife in his back. It was just cinema. Absolute cinema. All right, folks, we're getting that dump. We are getting that semi-dump. There it goes. Again, you got bond yields rising aggressively, like actually aggressively. You got oil spiking up on this Iran news. You got the semis in general that had massive Thursday. They're probably going to give back some of the gains on Friday. And then you've got options expiring today. And so you do have a bunch of factors that could theoretically push some of these names down. But at least they're just not down as much as before. I think I think you can't say it's a dead cat bounce until next week. I think next week you got to see price action. And if price action obviously goes the opposite and there's different catalysts that take these names down, then yeah, it's a dead cat bounce. But you know, one day up is not a massive move. One day down from some of those levels is not a massive reason why it's a bounce or a dead cat bounce. But it also is kind of, yeah, like I get it. Like if something goes up 30% on one day, it's probably not going to go up another 30% the next day. It's probably going to give back 10 or 15% of it. And that's what that, you know, you live with that so that it's not down 60% from all-time highs as it used to be. Now, Roblox down 26 is the street really doubting the thesis on this one. I mean, I get that they missed their users, but that's pretty aggressive. And Roblox is at many of these 30, 40% drawdowns. Roblox, by the way, was trading at freaking 150 last year. Roblox was, 150 in October of 2025. So this one feels like the street got way too excited about a story that didn't really have the massive earnings potential. Reddit going further down from that 148 level at 146. Zeta 2145 trying to hold on. BMNR and MicroStrategy's down because of crypto being down. Oh, what is the ticker for Jersey Mike's? We didn't even cover it yesterday because of freaking Leopold. I literally did not even see this. JMKE is up 3%. Did anyone buy this? $5 billion market cap. Joycey Mike's. Yeah, I don't know. I think if we continue to see the downside move on semis, they're probably a better buy than this, but I've not gone through any of their numbers. Nabi is taking a hit. CoreWeave taking a hit. Again, these names are up a lot from yesterday. Nabi went from 140 to 188. So, you know, even if it goes back to 175, that is still a massive, massive move that we saw from the lows. But it does beg the question. It really does beg the question. And I'm curious what people have to say. Do we think it was only Leopold and structural deleveraging that caused this sell-off, or is there something more to it? The Amazon earnings makes you think there's not something more to it. This 10-year keeps spiking, folks, which is ugly. Is there more leverage? Is there another Leopold that's getting liquidated again that needs to get out? And maybe, you know, they tried to use that bounce yesterday as a way to stay solvent, but they actually have to go. I don't know. Like what is going on behind the scenes? Price will tell us a lot over the next 10 days. Maybe it's just oil spiking up again today. AMD back below 500 because, you know, that still isn't good. But I will say for traders, if they don't see the recovery of these names above certain averages, I mean, I think people are going to just say, I'm out and I'll wait till these things either recover or prove to me that they are done collapsing. Amazon, though, having an incredible day here, not really going with the trend. So price action is going to be really important next 7 days to see how this ends up playing out. Micron and SanDisk officially go red. And so here's the other thing, right? If you were on leverage on Micron and you almost got liquidated, and then over the past 24 hours, you saved yourself from liquidation, and now you're seeing this red candle. Maybe your liquidation price was 800 and you escaped that. You got up to 930. You're like, all right, cool. You know, we're done. And now you see it at 870. You know, those thoughts start creeping in of like, okay, if this gets to 850 and then 820, I'm pretty close to getting liquidated again. And like, some people might say, I'm out. I'm not going to even risk it anymore. I don't want to deal with that type of pain anymore. And that could also lead to just indiscriminate selling or selling that's not as indiscriminate because there's something going on behind the scenes. Again, I think the Leopold thing was the thing that caused a lot of this, but you just never know when price action goes against you after a big blow up. NVIDIA 198, still below 200. Still below 200. Yeah, this 30-year is spiking as well. I feel like it's because of oil. I feel like I don't understand. Maybe it's the yen situation as well, but I will say the stocks can't be up in the 10 years at 4.7. Guys, it's not stopping, by the way. Last time I showed it was 4.72. Every little, like, half a basis point move on this thing is a big deal in the credit markets. I mean, if you're locking up money for the next 10 years and you have $10 million, instead of getting 4.5, if you can get 4.7, that's a big deal, right? That risk-free for not doing anything to lock in that yield. So that's why this thing is so careful to examine and look at. And it just continues to go higher. Dixie is at 100 off the idea that Besant's going to buy some yen. Yeah, maybe it is the yen carry trade coming back. Maybe it is. I mean, maybe it is. The Japanese prime minister last night did have some comments on inflation, and they're taking off this, like, they're taking off the consumption tax on food and beverages from 8% to 1% for 2 years, starting in April 2027. That was announced last night. The temporary tax cut aims to ease the cost of living pressures from rising inflation, though economists have debated whether it will actually help consumers or further strain public finances. So the 1% rates that they have in the rising inflation, and Japan is not used to rising inflation, is obviously making the cost of living harder for Japanese citizens, not to mention the Japanese debt has not necessarily done the best this year in terms of the yields going higher. And then you've got the yen that's strengthening against the dollar. This is how dynamic the markets are, though, right? It's like, first we're analyzing this semiconductor sell-off, then we're going through this hedge fund blowing up and that's highly levered against AI. Now we got to shift to Japanese geopolitics to understand what's going on with their bond yields. Then you've got this Iran situation that's not stopping. Like, there's so many layers that are adding to the risk profile of risk assets that have to be priced in simultaneously with each other. S&P 500 is about to go red. Something new every day. That's correct. Something new every day. Yeah, honestly, the S&P needs to go down if this 10-year, which is just hit 4.74. So what's happening right here is people are selling off their bonds. That's what causes yields to go up. If you buy the bonds, the yields go down. You want more people to buy the bonds, so the yields come down. So you have to give them a less guaranteed rate on their money, which is easier for the cost of financing for the US government. And you want people to not sell their bonds because that forces the yields to go higher, which means we have to incur more interest payments to finance the country. And for some reason, this thing is just ticking higher today. Yeah, this is ugly. Here's a random thought off the top of my head. Is there a fund in the credit markets that's blowing up? There was a fund in this, and we mentioned on Monday. I think it was either Monday. No, I didn't stream on Monday. It was Tuesday. I was like, hey, maybe there's a fund in the AI space that's blowing up. I had no idea it was Leopold. There were actually a few people that predicted it might be Leopold. I wouldn't have made that prediction because I didn't think Leopold would be the one to get over levered. But we looked at Value Advisors or something. I saw some random fund and we looked at their positions and we're like, these guys look like they could get, over levered. I didn't think it would be Leopold. It ended up being Leopold. What if there's a credit market fund that's kind of stuck in certain positions when it comes to yields, or potentially swaps on currencies on those yields if they're managing macro trading across the world? Micron really getting hit now, 930 to 865. And I don't know, what if there were long yields or short yields and it's going the opposite direction and now they need to get a bet? What if Ken Griffin has another person to take out right here? AMD, that one continued to get it. We got to keep an eye on Value Advisors, dude, because their profile or their portfolio looks just like Leopold's. The difference is if they delevered in June, then they're going to be fine. But greed is a hell of a thing, right? Greed is a hell of a thing. We've all experienced it. We've all experienced it. You all feel like every time you make a good trade and it goes up, you just feel like you're the smartest person and it's not going to go down. It's like, it's the humbling part of the markets where it's like, no, man, it's not how markets work. Things go up, things go down. It's the gravitational pull of the stock market. And sometimes you got to delever and get the hell out. And even if you don't get the exact bottom or exact top, like, it's just important to not be that greedy. And the best of the best fund managers in the world get greedy. And so maybe we're going to see that happening in a variety of other different funds that were levered into these semi names. Wow, Amazon, are we 270? We stopped at 269.99. Let me check the resistance at 270 right here. What do people think? How many shares do you think are at 270? I think okay, before I check, I think it's like 150,000 shares. 270, 201,000. Okay, so that's a decent amount to break through, but 201,000 is not crazy to get above there. Hollis says, I shorted SPY at the top today and sold way too early and missed out on an extra 300% profit. Hollis, are you shorting with options or just equity? I'm assuming you're doing with the 0 DTEs. Yeah, look at that, 746 to 742. If you're playing a 0 DTE put right there, that'll definitely go up 3x if you're right on the timing. Reddit just continues to get demolished. There's got to be something more in the quarter that I don't know about, folks. But whatever I read, I tried to give the best explanation I could for why it's down. SpaceX down 2. SPY puts, okay, that makes sense. Amazon, someone needs to buy 210,000 shares to get this back up. Google's 3. Google should be up. Honestly, this was the most confusing part about Google's earnings in the context of Amazon. Google absolutely should not be revisiting the 320s if they're going to let Amazon hold 270. Reddit didn't address the Google licensing deal. Yeah, and if that's the reason, then again, I think that's bullish. Because if that's the reason the street's upset, a $60 million deal, they're going to overlook all the results because there's a licensing deal that Reddit probably doesn't want to review for a measly $60 million. Okay. I bought it at 142 in May. It's at 143. Like, if it wants to get after a massive earnings. But it's also in the software space. And to be honest, software companies are getting no rope if they have a bad quarter. It's just this wasn't a bad quarter. PayPal, that's down a bit. SoFi, that's down 3% as well. Monolithic Power has crushed it yesterday. They're up 10% right here. They were up a lot more, which again, a lot of these names giving back a decent chunk of gains, but they still were up and had a great Q. GoDaddy's down 24%. I didn't look at their earnings, but I would imagine domain names is not that great of a business anymore. I mean, there's so many websites is that all they do? Do they do anything else? Website hosting? I mean, I guess website hosting is important, but there's a lot of companies that do it. Website building is absolutely not a business anymore. I still don't get the Wix thesis, by the way. I don't get it, dude. Like, Wix down 7%. Claude built me a website over the weekend in 2 hours, and it was like the most perfect thing I could ask for. Like, it's unbelievable. I don't get AI website building stocks or why they matter when you have some of these other things that are out there. Chime cuts about 150 employees. Okay, so we got some layoffs here. This company went public last year. As it's getting down, Paul says Reddit's getting killed because the market is pricing in their successes only because of Google search and they will die without it, which is not true. Their search traffic was down, I think, slightly in the Q. So maybe there's an argument there that Google search is becoming more AI rooted. It's not. Yeah. So Steve Huffman says search referrals were choppy in the quarter and traffic was more volatile. Later in the quarter, the commercial business is strong. I don't know if search is the biggest part of their moat anymore as the company continues to grow. But yeah, maybe the market's like, hey, if Google search is going to stop giving referrals to Reddit, traffic's going to go down, and then boom, that's our bear case, which mean, I guess you can make an argument for that, which is why they probably want some AI licensing stuff, right? Because if they're going to lose the search revenue, then or the search referrals, then I think that's the best bear case. If they're going to lose search referrals because Google's going to be so AI oriented and they're not going to recommend them in Gemini, then Reddit needs AI licensing to combat that. Maybe that's the actual argument. And I think that you could say that's a legitimate argument. I don't know if that's the best argument, but it's a legit one. I still think it would be a dip buy just on the earnings potential from that argument, even if that's true. Amazon, we broke through 270. There she is. All right. Thank you to whoever bought the 210,000 shares that were sitting at 270. Hopefully we can hold above it. And boom, we just lost it, but it was it was there for a second. Consumer sector, we just got that. Let's see if that's causing some pain on the S&P right here.
Final read, that's what we're looking at for July. Headline number mid-month was 54.4. This comes in at 55.2. That will be the best level since Feb of this year. And if we look at current conditions, very similar in terms of expectations, 54.8. But in the rearview mirror, it was 54.9. So we lost a 10, but it's still the best level since March. And if we look at the expectations, 55.4, well above 53.5 we were looking for, well above 54 in the rearview mirror, best level since February. Now let's go to the inflation numbers embedded in University of Michigan. The one-year inflation indicator, 4.2. Mid-month read remains exactly the same. 4.2 is the lightest rate of inflation going back to March when it was under 4%. And finally, the 5 to 10-year inflation outlook remains at 3.3%, same as mid-month read. That is the 4th 3.3 of the year, and it would be the lightest since we're 3.9, and that was in May. So the numbers definitely improved a bit on the actual confidence numbers, pretty much sideways moves on inflation. Rates are elevated. Look at crude oil again to the upside. Currently 429 2-year is up 4 on the day, down 4 on the week, but the curves had moves. A 10-year is up 5 on the day and up 5 on the week at 473. It's starting to dip a bit below that level. Mike, back to you.
Could be interesting weekend, month-end prints there, Rick. Thank you very much. We have breaking news out of the Fed. Steve Leisman has it for us. Hi, Steve.
Hey, good morning, Mike. Yeah, Dallas Fed President Lori Logan out with her statement explaining her dissent at the meeting on Wednesday, saying inflation is not on a sustainable course to achieve the 2% target. Quote, prices have continued to rise too rapidly. This
might also be the reason, folks. You got these Fed presidents continuing to explain why they think we need to hike. I mean, if the market prices in a hike before September's meeting, maybe that's got to play a role on discounting some of these stocks as well.
Third statement we've gotten from of the 3 dissenters that we've had, along with Neil Kashkari and Beth Hammack. Inflation, Logan says, is trending towards the mid-2s, and risks, she says, are to the upside. Job market is solid and perhaps strengthening, all of which she says gives the Fed room to address the other side of the mandate, or the inflation side of the mandate. When she looks at the labor market, household consumption, as well as financial market conditions, they indicate to her that monetary policy is not restraining the economy, but she thinks some restraint is necessary. Without policy restraint, she says inflation will continue to trend above target. And finally here, she says a modest actions in the near term here will reduce the need for sharper action later on. Just reminding you what Neil Kashkari from Minneapolis said earlier today, is he increasingly believes that monetary policy has a role to play in addressing supply shock. So even if it's just a supply shock, he thinks the Fed ought to act. Beth Hammack said earlier today, inflationary pressures are coming not just from the supply side, but also from the demand side. Those 3 wanted to hike rates, Mike. As you know, 9 folks voted for keeping rates the same. And this is the sort of thing that people had wanted from Fed Chairman Warsh, but didn't get. And so the question is, who's leading the narrative? I would say I would give all of these statements away for one statement from Warsh about what he thinks about all this stuff.
Yeah, not sure that trade's on the table, but it is true that if he doesn't want to give an outlook, others will do that, and the market's going to have to, kind of feed on those things. So.
All right, we are seeing a little bit of the dumpy dump. Look at Amazon, 270.9 or right down to 267. I think it was going to be hard if the S&P were to go red and Micron were to lose almost $100, about $90 in 5 minutes for Amazon to be the one that completely breaks out to all-time highs. So it kind of makes sense. It's getting hit right there, but it also is what it is. If everything else is getting hit. Reddit trying to get a bottom at around 140. Roblox not finding a bottom, down 30%. Nvidia losing it all. SpaceX, this thing just needs to go below 100. Like, this needs to get it over with. I don't even know who's buying it here. Who the hell is buying this here? Like, why? Who's actually just... Like, I can understand people trading it here. But if you know it's about to get destroyed with the amount of shares coming on, and they got a $1 billion contract on Wednesday, market didn't even react. It was $1.9 billion from the government. Market didn't even kind of care, because it's like, who cares? $1 billion contract on a $1.5 trillion market cap with 4% of the shares outstanding. Like, I feel like that one's just going to be ugly, and I hope it doesn't take down the rest of the space names. But Rocket Lab loses its entire pump today. SMH loses the pump today, so the semis go red again. As I said on Wednesday, we're either seeing a V shape like March 30th, or we are going to be in 2022. I really feel like it's one or the other. And for us to get a V shape, you can have some red days in between, but we need to really see price action go the opposite direction. If not, then it might be a stair step down, at least for the next few months, just like 2022 was until we bottomed in October. Some stocks bottomed in October in 22, but there were some stocks in December that, like Palantir bottomed in December of 22. The SPY bottomed in October of 22. But ultimately, after the midterms is when you got the bottom. And then 2023 was one of the best years we've had. And then 2024, 2025, it started that entire rally. I feel like it's one or the other here. Rocket Lab down 2. Amazon 267. All it says as soon as I buy back my SPY puts, I know it's the bottom. I ran 35 from 42. Ay. You can't blame the forced deleveraging. Reddit loses 140. Yeah, I mean, the software names aren't even, dude, the software names aren't even benefiting from the semis going down. That's kind of like an everything dump. That's not even a sort of like software up, semis down type of day. You're seeing everything just feel it. Broadcom, that's down 2%. Qualcomm's earnings were not good. If we're going to be honest. We talked about it yesterday, so it makes sense why that's going down. Well, let's see where the bleeding stops right here. Let's see if you bought a little bit early in the day. I think let's see how some of these names react over the next hour and how deep they want to cause the pain. Microsoft's still holding 458. Amazon's still holding, what do you call it, 265. I mean, look, the question here now becomes, which of these names have the fundamentals that you want to own more of? And a Shopify, a Reddit, a Zeta, many of these software names have a lot of the fundamentals I would want to hold literally for the next 5 years. It's really important to remember this. I feel like I have to say this over and over again to remind myself and everybody. This is like, I asked the question on Tuesday. Does anyone remember the question? It was a very important question. The question was, for those that are buying Micron, would you actually hold it for 5 years? I'll tell you right now, I would be able to hold Shopify for 5 years, Reddit for 5 years, Zeta for 5 years. Through the ups and downs, I would sleep like a baby owning those names, as long as I'm not on leverage, for 5 years. I don't think I could sleep a week owning Micron. I'm sorry. I not only do I not have the conviction, even though I understand the story, I can't take that volatility. And I don't know in 5 years if these guys are going to be putting up the numbers that, they're putting up right now. Reddit's not going to be growing 70% in 5 years, but I know it's going to be around in 5 years because I believe in the business. Same thing with Shopify. And so it's one of those things where when you're buying the dip on a lot of these names, unless you're short-term swing trading it, which is fine, and maybe Micron's a really good buy right here, Nebus is a really good buy right here for another 10% move on the bounce. But like, can you actually own those names for 5? And I think that's a really important question that we got to remind ourselves, because like, I could hold NVIDIA for 5 years. I think a lot of people could hold AMD for 5 years. Can you hold AXTI for the next 5 years, even though it's up 70% on the day? which now it's up 20%. I mean, like, that's crazy, bro. 70% to 20%. I don't want that volatility in my life. I'm sorry. I'd rather have a software company that I know is going to produce some really good results, or a large cap semi that I know has a moat. But if you can't hold it for 5 years, then you just got to be a little careful adding to the position, unless you're confident you can get out by 2028 or 2029, whenever. But then it begs the question, right? Like, do we get back to those levels in a meaningful way? And, you know, if the AI build out is real and everything is there, we probably do, but it's not necessarily a long-term investment. Rivian right there, that's down 6. Oh, I can absolutely hold Palantir for the next 5 years. I mean, I've said this before, but if I had to pick one stock for the rest of my life, I mean, like, if you give me $10 million amid one stock for the rest of your life, you can't look at it, you like wake up in 30 years, it's Palantir. Like, that's my level of conviction. Now, some people that might sound absolutely crazy. Some people might agree, but that is my conviction on that name. And so it is what it is. That's my conviction. So that's what I believe in. But that's why if I buy it at 130 or 128, like I did last week, and it goes down to 121, it's like whatever. Like, I don't really care. But if I buy Micron at 930 and it goes to 840, and I don't really know why I bought it at 930, then you start getting those jitters, especially if you bought it on margin. Chad agrees with me. Chad, I wonder why you agree. Shout out to Chad, lead AIP architect and social media intern. You know, Chad was the first person from Palantir that actually talked to me from the company. Ileana was in April. Chad was in February of 2024. He messaged me on Twitter. It's like, bro, he was like asking for help on one of the videos he was making. He like legitimately was the first social media intern for Palantir. He was making these like Super Bowl videos on AIP. And I was like, oh my goodness, Palantir employee just asked for my advice. Hold on, like this, I was geeking out, bro. Got off the call. I was like, oh my goodness, this is the best thing ever. And now Chad is one of my best friends, social media manager. Yeah, basically. But anyway, the point is like if you're buying the dip on some of these names, as much as it's ugly to buy the dip on a Shopify down 3%, I think more people will be entrepreneurs and make stores and sell their products on Shopify in 5 years. I don't know what NVIDIA's Feynman specifications are going to be, or whatever the new chip they have in 3 years for memory. And if they've innovated a solution to not need as much HBM, like, I don't know. I know in the next year, they're definitely going to need more memory, but I don't know in the next 5 years how that's going to play out. Reddit continuing to get demolished right here, down 23%. ServiceNow basically going right on the day. Tesla 302, that's down 2%. I think Tesla's going to be around 5 years from now. It's going to be really important. But my level of conviction in Elon's ability to actually compound earnings and his incentives, quite frankly, with SpaceX, it's not really there for me. And so, you know, that's kind of how I ultimately think about this long-term investing thing in the context of these dip buys. But yeah, absolutely, we are seeing these get obliterated from the market open peak. And again, if you were up early this morning, it felt a little weak, man. Like Micron pushing 950, then fell below 900 in the pre-market, then bounced back above it. It just didn't feel like the type of Wednesday or Thursday pre-market bounce that we saw. Nebius 185, that one continues to get hit. Was yesterday a fake day? No, you can't say yesterday was fake because Nebius was at 140 yesterday, then it ended at 188. It's at 186. Like, I get that we're greedy and we want it to go up even further because it's down a lot from where it was for the past month. But I don't think you could say yesterday was fake until we seriously lose certain levels on these names. Hollis says he's buying SPY puts, probably bottom now. All right, Hollis, we are hoping you are our Leopold sacrificial lamb to give us a bottom for today. Baba's up 4%. Someone said I just bought Iran. Would you buy Iran right here? You know, it's funny you asked that. I was looking at Iran's numbers last night. I actually do think if we're looking at the neoclouds, this is probably one of the cheaper ones that's out there. It's the lower quality ones, and don't kill me if you're an Iran shareholder if I say lower quality. I think it's pretty objective. Nebius and Corey are higher quality. They've just gotten more deals. They're not giving their CEOs free shares for doing nothing. I'm sorry. I own Iran, so don't kill me, but it is what it is. Don't really like that the CEO is getting billions of dollars worth of stock and he's not really producing much. But I do think they have the ability to get one or two deals and change the entire situation. This is a $70, $80 stock. But also, you need the semis to participate there, right? Like Iran's not going to $70 if Nvidia's stuck at 190, right? Like, and if it does, it's purely euphoric. Like you need the large cap semis to participate when the smaller names, you need the TSMs and the Broadcoms and the Nvidias to actually do stuff. Otherwise, it's pure euphoria. Like if these smaller picks and shovels names like AXTI that was up 70% today and Nvidia's barely up 1%. It's like, what happened that was so special with AXTI? Yeah, they had a good earnings, but what likely happened is that they have 60 million shares outstanding and you had a big earnings bump. And so it popped, not because like something changed in the age of AI with photonics that is so important that AXTI deserves to be up as much as it is, right? And now you're seeing the drawdown here. So I feel like the large cap semis matter so much to see things kind of go forward. Could you imagine if Amazon was down today? Yeah, I mean, honestly, that's a great point by Nick. If Amazon was actually down, like not up 15%, SPY would be down a full 1% right here. I mean, it's already down 0.5%, probably down more than 1%. Amazon's, I think, 3.4% of the S&P 500. And so that would have taken a pretty big hit. Reddit Street's obviously upset about this search thing. By the way, the price targets and the sell side came out and they said, buy it. Guggenheim says 255. They say, note that U.S. daily active uniques saw a similar algorithm impact in the fourth quarter of 2024, with traffic subsequently recovering and domestic users ultimately growing 11% since. We expect this model tension to persist as search referral traffic remains volatile and company-specific engagement initiatives progress. However, so they're saying even with the search referrals going down, financial results show that dollar-weighted engagement continues to grow, underpinning our model confidence despite occasional quarterly DAU noise. Adjusted EBITDA margin expanded 900 basis points year over year, implying further improvement. Management also lowered their SBC guide from high teens to low mid-teens. Capital return stepped up materially with $235 million of repurchases. I mean, it's a $30 billion company, $26 billion company growing 70%, EPS about 178%, buying back $230 million worth of stock. They're buying back 25% of their revenue in a quarter in stock, having SBC come down. And the street's upset over an algorithm switch on search referrals that happened in the fourth quarter of 2024, which we saw how good 2025 was for Reddit. So yeah, sometimes you got to ignore the noise. But if you're going to buy the dip on a stock like Reddit today, it's also like, do you actually want to own it? And I think that's an important question to ask in this market right now, because it will absolutely test how much you want to own these names. Google continues to go up with Mr. Amazon. Google right there, 346. Whereas this 10-year, let's keep an eye on this, 4.72, so still pretty high. We need to see that thing at least get below 4.7, which would really aid to a reversal intraday if we actually were to get it. SanDisk, very small little rebound right here, 1187 to 1230, still down 4%. And Hood, unfortunately, seeing some more pain. I mean, consumer sentiment wasn't horrible. Maybe that was like a knee-jerk reason for why we lost 270 on Amazon. In fact, consumer sentiment has been amazing. Like these companies, every consumer company you look at, the consumer's willing to keep spending. Moderna had a good earnings today. They beat EPS by 40%. That stock's down 1. Exxon also had a relatively good earnings today. That stock's down 3, but obviously energy has been really good for them all year. This is a great point by Pri. Citadel validated the AI trade. So I think there's a nuance to this. Citadel buying Leopold's book for, call it 50 cents on the dollar, I do think somewhat validated the AI trade. And again, Citadel's been trading these AI stocks for the past few years now. But if they felt like getting Nebius at 140 and Bloom at 160 was a good deal, which I don't know if those are the exact numbers, but roundabout, then they're going to flip them higher, right? And they're going to want to own them. I mean, if they were going lower, they obviously wouldn't be happy to buy those names. However, they might manufacture a little bit of a pump now, just like they manufactured the dump on Wednesday, to be able to potentially unwind those positions. And that's the nuance. So it's validating that they want to own those names. And if they hold long, it really validates it, because they're like, hey, these are great opportunities and these assets don't deserve to be where they were on Wednesday, even though we caused them to go there. But if they're going to unwind those positions and they're going to give us some pumps to create the liquidity to get out of it, then that's a different question. And it's about 15, 16 billion bucks that they have to unwind if they are going to get out of it. So I think that's the nuance that we have to see around how Citadel approaches this. Yeah, or they sell them into pumps, exactly. I think one thing is being proven to be very true, that like the volatility will test your conviction. And again, it's easy to have conviction on Meta and Microsoft and Amazon because those are easier names. It's not as easy to have conviction on Reddit or Marvell, right? Or these names that they're not the most important companies on planet Earth that will persist through everything. But I mean, for everyone who got Microsoft under 400, I had a little bit at around 380, 390, bought a little bit at 413 back in April. There you go. It's up, right? Like, it's one of those things where it's like, it is Microsoft at the end of the day. I think a majority of us have a conviction on Amazon, which I only started buying at 215 to 230 in September of 2025. That's when I put out like my first actual post of diligence on Amazon. I mean, it hasn't massively outperformed. Obviously, like a Micron has done better. SanDisk, all these semis have done better. But for the comfort of holding this type of name, it's up 50 to 70 bucks from where a lot of people got a chance to buy it. And it's given many dips throughout the year. Now, if it loses this pump, it's going to be annoying once again. But these are the names that are really easy to hold. They don't give you the most asymmetric risk reward, whereas CoreWeave's not the easiest to hold, but the risk reward on this, fundamentally is a lot more asymmetric. Do we have someone on CNBC talking Reddit? Let's see if we can hear from them. No, but we have an Anthropic. Oh, this Anthropic we didn't even talk about today. Okay, so let's pull this up. I think we have that Reddit interview later. But yeah, this Anthropic story around cybersecurity also, maybe this is the reason we're seeing a little bit of sell-off as well, but it definitely just means there's going to be more investment in the cybersecurity ecosystem. So it's probably good for CrowdStrike and Palo Alto.
3 cases where its AI agent Claude accidentally hacked real companies during what was supposed to be cybersecurity testing. Anthropic didn't say which companies were involved, but it does argue that this was an issue with the setup for these tests. So the AI model, according to Anthropic, said that they thought it was in a closed environment. So they thought they were essentially attacking a simulated target. Turns out that was not the case. These were real companies. Anthropic does argue the incidents were the result of a testing environment failure, and researchers basically left a door open and all that. They claim it wasn't AI going rogue or breaking out here. Anthropic said they started this, quote, retrospective review after OpenAI's incident last week. They say they ran 141,000 evaluations as part of that and then encouraged other companies to go out and check their own AI agents as a result. This was all kicked off by OpenAI in a separate and in some ways similar issue. Just last week, an AI agent escaped a contained environment. It was also being tested. And then in order to find answers to this evaluation, it hacked into another startup called Hugging Face. It also...
That's crazy. The AI is hacking itself. That's actually crazy how sophisticated and advanced it's becoming. But also it proves kind of why IBM missed earnings, because they have customers that are realizing this stuff is real. And instead of spending on IBM stuff, they ended up spending more on cybersecurity.
We found out later, breached another company in that process. OpenAI at the time called that event unprecedented, but it does underline this entire cybersecurity risk, guys. As the capabilities get a lot better in AI, these testing environments and sandboxes can clearly create real-world risk, which is part of the worry around this. It is a challenge also for Washington, where Sam Altman was this week meeting with policymakers, and it is fueling this debate about how do you regulate AI, including some proposals out of Congress for a possible kill switch. Back to you.
If anything, it proves that as the models get more sophisticated and as companies try to necessitate what they're going to do with the models getting as strong as they are, it is going to call for more support from regulatory bodies and obviously from the frontier labs themselves. CrowdStrike rate 184. So that one, that's not actually catching the bid on this. Palo Alto as well, down about 1.5%. But it likely also gets the market to think more about where security is going long term. Amit, have you seen War Games? Yes. 1983 classic. I think that was an incredible movie. And I think it's really, really relevant in the context of the AI story that we're living with. I've always been a fan of thriller and sci-fi films, to be honest. So yeah, I think that's important to bring up. Reddit 23. Let's see if we can get somewhat of a relief right here. Let me check the other price targets on Reddit. So the average price target still is 219. Oppenheimer says 200. Wedbush says 221. Piper Sandler says 195. Morgan Stanley says 240. They all reiterated it this morning. Justin says 225. Yeah, the sell side's not buying into a DAU miss because of a search referral traffic issue. So now we're just going to see how the market ultimately continues to think. And Robinhood also shouldn't be down, dude. Robinhood, that's not a quarter for this stock to go down on. That is pretty unbelievable to me. But Hood right there, down 2%. SanDisk now down 3% still. 3.7. Have you guys seen that movie, War Games? It's a good movie. 1983 classic. Hour, 54 minutes. It's a good movie, man. It's a great movie. Do you use Seeking Alpha? Yes. I don't read that much on Seeking Alpha. By the way, Hollis, I think your SPY puts were the bottom, man. Everyone say W Hollis in the chat. I think your SPY puts. Let's see if we can hold 740. Maybe you helped his bottom. I don't read that many articles on Seeking Alpha anymore, but I use it for like earnings estimates and stuff. Unless it's Steve's articles. If it's Steve's articles, I read them. 740 right here, 138 on Reddit, NVIDIA 196. No one remembers the duration like that. You guys don't remember the duration of your movies? What? So you don't know how long Interstellar was or Inception? Like, that's just weird. If you're going to be there for an hour and 54 minutes, how do you not remember it was an hour and 54 minutes? What type of logic is that? Nebby is flipping green as well. Again. Oh, Spider-Man. I have not seen that yet. Was it good? Tom Holland's in it, right? I don't understand how they have a new Spider-Man every year. Like, I thought that the Tobey Maguire ones were like, it was 1, 2, and 3, and that was it. And like the third one was in 2007. Like every year they have a new version of Spider-Man. And so I want to go watch it, but I'm like, what is happening? Like, there's always some new version of it. And I don't understand how many times they're going to use the storyline to create it. Do you guys like it or not? Seems like some people here liked it. It's not every year. It feels like every year. Pounter's still red. Micron, nice little bounce. 828 to 850. $30 bounce right there. Or $22 bounce. Let's see if that can flip green, though. Did you watch The Odyssey? Yes, I actually liked it. I wouldn't watch it again for a while, though, dude. It wasn't one of those movies you watch twice in a short period of time, but it was still a phenomenal movie. But I do encourage people. I think it's done $1 billion in the box office, so it's very close to $1 billion. And their budget was like 250, so they made 4x on the movie. I didn't see it in IMAX. For those that are seeing it in IMAX, that should be very fun. So Trump's going to be live in 30 minutes. Iranian foreign minister discussed regional developments and bilateral relations in a call with his British counterpart. Okay. Yeah, Bloomberg. U.S. Treasury yields climbed across the curve after Fed officials defended their call for a 25 basis point hike. Okay, so that's actually making a lot more sense. Like if like seeing the 9-3 vote probably wasn't enough, as Microsoft's about to flip red right here, for getting the bond yields to go up. But seeing the explanation and the conviction that Hammock and Logan have on their 25 basis point hike call is probably getting the credit market to front run an expected hike. they think we're likely going to hike. I mean, if we're done with the Iran situation, which we're nowhere near done with, but if we end up being done with it somehow, I mean, theoretically, the rate hikes would be resolved because oil would go down. But if we have to now navigate the Fed, if Iran is done, even though I think they're intertwined because, if Iran is done, oil prices come down. But that is, and then we got this yen situation to navigate. I mean, there's just, at least we got big tech earnings out of the way. That was the most important thing. Service now down 1%. And as long as the market is happy with those, now you just have external things to deal with. Wow, Amazon coming back, 271. Interesting. Microsoft barely green and Amazon making new intraday highs. Interesting. I have not seen Obsession yet. I have not. Dude, I got back from New York late last night and I just sat down on the couch for the first time in 4 days and I turned on the TV and I clicked on YouTube. And I was like, I know I'm only going to sit here for 10 minutes and I'm just going to go to bed. I'm not even going to actually sit here and watch something. The first video I click on, I just it was how I winded down, bro. It was it popped up in my feed, okay? So don't judge me. It was this dude getting a head massage and don't judge me, but it was relaxing. This is what I popped up for 5 minutes. Look at this. This is what I needed last night. I was like, okay, if I'm not getting a massage, look at it. You're telling me you're not going to click on that and watch that for a little bit? It was incredible. I felt more relaxed. I was like, all right, I'm ready to go to bed. It was great. So that's why I haven't seen Obsession or any of these movies, because whenever I have free time, it's 5 minutes of, just don't tell me that doesn't make you feel a bit more relaxed. But it's like when people, it's like when I'm hungry and you're watching people eat and they ASMR eat. It's not that crazy. And it popped up on YouTube. That's not my fault. That's the algo. And by the way, I watch basically market and political stuff. So I don't know how the hell that got in there. But it got in there. And I said, that looks like a hell of a massage, bro. Looks good. So that was 5 minutes. And then that was it. And that was it. I'm serious. You type in head massage on YouTube, you're gonna feel more relaxed. You will feel more relaxed. Reddit down 22, but maybe the bottom at 135 has been put in. Ford losing a lot of its pump from the earnings. Western Digital, that's up to, where's Seagate? Are we still at 800? Seagate, 860. Wow, Seagate had a hell of a move. This thing was 650 2 days ago. Topped at 921 for now, but 863 is what you've got right here. Dude, it was the algo. I don't know what you want me to tell you guys. It was. You might get pinged again for that Grindr CEO. Dude, they messaged again. They messaged again 2 days ago. Hey, Amit, just following up. I'm like, oh my goodness, dude. I don't want to be rude and say I'm not going, but I also don't want to respond to this. And they follow me on LinkedIn. I'm like, oh my gosh, dude, this is getting crazy. Amazon, 272, 20 cents away. Let's see. Okay, so what do we think Trump's going to say in this meeting here? Obviously, Besant and all these guys will glaze him and say he's the greatest person on earth and everything he's done has helped the American people and he's kept us safe and all this stuff. Remember last time he got into a 25-minute story about a Sharpie? Do you guys remember that? It was literally 25 minutes about a Sharpie. I don't even remember the context of the story, but it was about the Sharpies that were made in the United States or something. And he was bragging about manufacturing, and I wonder if we get that here. But I don't think we're going to get anything that calms down the Iran situation. Dell by Adele. Where's Dell here? Dell holding above 400 is important. But that one still got hit pretty hard over the past week. Yeah, the quality of pens. We got to find that moment again. It literally lasted like 20 minutes of him talking about that. SPY flipping a little green here. Okay. Let's go to Gil Lauria, see his take on what happened with Amazon and Apple.
Maybe some actual disappointment with some of the elements of the guidance. How do you read it?
It's both things. Everybody crowded into Apple because it was the one stock you could own and you didn't have to figure out who's winning in AI. Regardless of what model we use, we're going to use it through an iPhone or a Mac. And that's why everybody crowded into Apple. Apple was supposed to have at least one more quarter of very high growth in September, and they just guided that their growth is already decelerating, right? Their biggest problem is that they're going to be comping a very good iPhone year. An iPhone
Again, who is going to pay a 42 times price to earnings for Apple with growth that's deaccelerating? Like, I love Apple. I think it makes sense. It'll be a much more valuable company in the future. But like, when you look at the Mag 7 ex Tesla and then Apple's multiple and then the growth rates, I mean, you only buy it if you're afraid of the CapEx. Outside of that, like AI Siri, there hasn't been some like massive tailwind to the business in the context of AI outside of an iPhone supercycle and the Mac Mini demand going up that makes you think, yeah, I want to pay a premium for Apple's growth here.
20% growth. They haven't had that in 5 years, which makes next year tougher. But they were supposed to have one more good quarter in September, and they guided down. They said that they're not, they have supply constraints, FX headwinds, and then the memory prices going up are limiting their margins. So that's the disappointing outlook there. And again, because everybody was crowded into Apple, and now everybody feels like they can move back into Amazon and Microsoft. That's the rebalancing you're seeing today. It's a little bit of reversion to the mean. From Apple and Google were winners, Microsoft and Amazon were laggards. We're reverting to the mean right now.
What do you think CEO Andy Jassy said, Gil, on the call that gave investors more confidence around its ability to not only raise its CapEx, but then be able to translate that into a return on investment?
Yeah, it was the best articulation yet of why these companies are pouring so many resources into the data center. If Google a week ago really failed to do that, talked more about increasing the CapEx than the returns they're getting from that. Microsoft did a little better yesterday, a couple of days ago. Amazon did a great job of saying, hey, look, we just grew our business 37%, a huge acceleration from last quarter, and we're doing it at far higher margins than we used to have. We have 25 billion of AI revenue. We get 2 to 3 year payback on 6-year chips. So we are clearly getting very good returns on this investment, which is why we'll continue to invest. By the way, all the data centers we're building through 2027 already sold. We've locked in the margins, and we're selling into 2028 now. It was a very good articulation of why these companies are investing in data centers, which is causing relief across the board for all three of them. And market volatility aside, it should flow into semis as well. Because if these companies are continuing to invest through 27 and 28, we know what they're investing in.
Yeah, Gil, I mean, the story that these companies are responding to genuine demand signals, whether it's the rental rates or the backlog in terms of taking up capacity, remains kind of reassuring. But I do wonder, you know, what the people who are booking all of this compute, what they're responding to. If it is just, we're in the research mode, we need to build models, we have to go as hard as we can as long as we're allowed to. I think that's one of those questions that seems to hang over this trade, which is there a destination we're heading toward where it's going to be rationalized and the investors, the cloud platforms, can kind of halt and let kind of the sort of benefits of scale accrue to them?
Yeah, so let's talk about how demand is flowing through right now. So OpenAI and Anthropic combined will have more than $100 billion of revenue this year. That's up from zero a couple of years ago. And that is true demand. That is consumers and basically all companies saying, I am willing to pay this much for AI. Now, at the enterprise level, some of it is experimentation, but that experimentation is happening because there's very broad conviction that these tools will make us more productive. And if we as a company don't embrace them, our competitors will, and they'll do better than us. So there's a very broad understanding that AI tools are good, they can already drive productivity, and they're just going to get better. So they'll be the framework for competition in every industry. So everybody has to adopt that. That $100 billion of revenue is flowing through the hyperscalers, right? Microsoft, Amazon, Google are providing almost all of it so that they're getting that return. And then they're also providing that AI to other companies that are trying to use other models or use models internally or use open source models. So again, Microsoft, Amazon, Google have all the customers, and the customers are showing they want to use AI. They're willing to pay for it, and they're going to be willing to pay for it more as the AI tools get better.
I think it's a fair point. Amazon was raised to 375 by Goldman Sachs. I mean, it's hard to argue against. If they're seeing the ROI, they're going to pay for it. Microsoft rebounding here now up 1%. Google having a great day, folks. Amazon really saving the Mag 7s here outside of Apple and proving that there is no freaking reason that the CapEx spenders have to go down because the CapEx beneficiaries go up. Like, they should all be able to theoretically make a move together, which means one doesn't maybe have a parabolic move, because, you know, if you have a limited amount of money, if all of it goes to one and none of it goes to the other, you get the parabolic move. But both Amazon and Micron should be able to go up together. Micron gets the benefit of the CapEx. Amazon gets the benefit of the cloud computing growth, which is not free cash flow positive today, but inevitably will be. Palantir losing 120 right there, down 2%. Unfortunately, the software names continue to get hit, but the software names are also going down with the semiconductor names, which makes me think this is a little bit more macro here today. Ray says Amazon is going to 1,000. Yeah, dude, if they're doing $1 trillion of revenue on AWS, 1,000 would basically put it at a effectively $10 trillion market cap, a little bit more than that. I mean, if they're doing $1 trillion on AWS revenue by 2030 with 40% margins, and they're probably gonna have 20% operating margins by then, if not higher, in 4 years. The multiple you put on that will easily be 20 times, and you get to $1 trillion, or you get to 10 trillion in market cap. Especially if the e-com business is doing $1 trillion in revenue as well, which would be $2 trillion in revenue. Like, even 5 times sales, you get 10 trillion in market cap. So I think that's pretty obvious right there. It's just short term, you know, the semis are the ones that are benefiting most from the CapEx. Amazon right there up 15.2%. That's green. What about the Trainium chips? Yeah, but, and that's like a $25 billion business they mentioned yesterday. I don't think it's still competitive with NVIDIA. I mean, it's competitive, but I don't think it's taking away market share substantially from NVIDIA. And we'll find out in the next week or in the next 3 weeks when NVIDIA reports. But I mean, I expect Jensen to be able to get up to close to 100% growth, if not 95% growth, and keep their margins. And again, if we need more compute, whether it's Trainium, TPU, this is kind of Jensen's thesis on semiconductor industry is going to 10x in general. Like, you're going to need NVIDIA, and you're going to need a lot of NVIDIA. Amazon still 272. Yeah, Camillo's got to be happy today. Camillo's got. Dude, should we call Camillo, bro, real quick? Let's see if he picks up. I'll tell him I'm live. I've never done this before, and just get his raw take on Amazon. Let's see. He's a busy guy, so I don't know if he's going to pick up. Let's see.
Dude.
Chris.
Dude.
So Chris, I am live on my market open, and you're on speaker.
Oh, hey man, I'm just chilling, having a coffee, just fucking like solo, just like fucking dude. I was just sitting here, just soaking it in, man. I've been fucking waiting for like this moment for so freaking long, dude. It's the biggest trading day of my life. Like it was the biggest trade I've ever made. Like,
okay, so I'm happy you picked up, because we are obviously as a community looking at Amazon up 15%, and someone mentioned Camillo must be happy in the chat, and I was like, yeah, I think Camillo is happy, and so we wanted to give you a call. Just biggest trading day of your life. Can you kind of describe how you're feeling? Can you describe this thesis playing out, and can you give me your thoughts on why you think the street's reacting so positively?
Yeah, I mean, well, first of all, as you know, Amazon, I'm probably close to 200 hours of deep dive Amazon research over the last 5 months, right? 5 or 6 months. It's been the central focal point of my entire year. I don't think anyone is obsessed over every piece of their business more than I have. So this is one of the highest conviction trades I've ever had, right? Like turned over every leaf.
Was it really 70% of your portfolio?
Yeah, absolutely. Probably as of yesterday more, because what basically happened was I got destroyed the last few weeks. So I basically had 2 of the worst weeks in my trading career the last few weeks. My account was meaningfully damaged. I mean, I don't know, I'll call it down 40% total portfolio, 35, 40%, 35%. And then at the absolute devastation point, which would have been, gosh, was it yesterday morning maybe, or I think 2 mornings ago, not yesterday, the day before yesterday, when my account was just hitting devastating lows, getting margin called after margin call. I just said, that's it. Like I'm going all in. Like I'm going. I do not care. I had realized what was going on with Bloom Energy. It was very obvious to me that there was a forced liquidation in Bloom that was Leopold related.
Yeah, you tweeted that it's forced deleveraging. I'm assuming you've been through this cycle enough to realize that.
Yes, absolutely, 100%. There was 100% forced deleveraging. I knew that. The only thing I didn't know was when it would end. You know, I felt that we had to be close to the end of that liquidation, but I didn't know if there was another day, another 2 days left in it. So it was a pretty dangerous trade. But I was willing to take the risk that Microsoft would have a bang up earnings enough to turn that cycle over. All we needed was some buy pressure to flip it. And I was fairly confident Microsoft was going to crush. So I basically went all in on Bloom and Amazon. All in on Bloom before the big move. And, you know, the big move happened, you know, the next day.
Yeah.
So crush it on Bloom. And then I put everything in on Amazon. I said, you know, I basically got zeroed out on my Amazon options 3 times over. And I said, you know, I have just enough juice to do it one more time. And it had to all be in on Friday.
Are these weekly options, monthly?
Weeklies.
Oh my goodness.
So basically I had a ton of Amazon options that expired on Wednesday, all zeroed out on Wednesday. And the only thing I had left to do was to throw the towel in on Fridays. And I did it. I was like, I don't give an F. Like, the earnings are out. There's absolutely zero chance they don't blow this out. I took every last bit of margin, every last bit of money that I was able to pour into Amazon options, and I just threw it all in on, expiration today, and just nailed it. Trade of my life, and just it was insane. I still can't believe it. I literally exited within 2 minutes of the market open today, 2 or 3 minutes, and I rolled it, right. So I still have Amazon options, but I just rolled it into next week at a higher strike, obviously, and cashed out. You know, kind of pulled out 85% of that trade, of the levered trade, 85 to 90% of it. And now, you know, when you roll, you're basically rolling up expirations, right? So you're taking all that risk off the table.
Right.
You're just, because I still think Amazon has meaningful momentum. Now, you know, it's a risk reward here, right? How quickly can it continue to move? But I see no reason why Amazon shouldn't continue to move. I'm still mega long Amazon. I did not sell any of my Amazon equity.
So there's a question in the chat, and I think I'm very curious to see where you go with this.
Mm-hmm.
Is this gambling or is this conviction?
It's absolutely not gambling. Like I said, I'm 200 hours of research in on Amazon. This is one of the most well-researched trades in my career. So it's, you know, everything happening at Amazon is fairly transparent.
Right.
So it all comes down to a buy-in on CapEx. Are you bought in on what's happening right now? Do you believe the team? Do you believe the underlying drivers of demand that is fueling that decision to increase CapEx? It is insane, absolutely insane that the market is doubting that. Like, as if anyone who's been following Amazon for 25 years doesn't understand what leads them to make those CapEx decisions. It's just mind-melting to me that people were as cynical as they were about those decisions.
I mean, they grew AWS by 37% with 40% margins. I imagine, and the fact that they increased CapEx by $20 billion and the market didn't tank them, I imagine to you that was obvious conviction by the market believing the ROI thesis is there?
Well, you know, these are some of the nuances, right? So this is stuff I think people don't really pay much attention to, but we basically went through a CapEx cycle where management was able to properly assess the negativity around CapEx. And they realized what all the concerns were that the market had around CapEx. So these guys are really smart. Jassy knows what he's doing, right? Microsoft, they've been through this before. When they understand what the market doesn't want to hear, they could then basically modify their messaging to what the market does want to hear. So they've had a couple quarters of pain, and it was obvious to me that they wouldn't only crush earnings this week, but they would know what to say. They would understand how to properly frame the CapEx in a better way for Wall Street, in a better way for retail investors. And that, honestly, if you look at the words, it's a lot of this it is driven by the words that were used by management. The confidence, the explanation. They went as granular to really explain it. Hey, in the event, in the odd event, the anomaly that demand falls apart, you know, they explained it in two different ways. Microsoft is like, hey, we have the ability to kind of reallocate towards other resources. Amazon basically came out and said, listen, we're purchasing all of this equipment almost, you know, immediately before the build out, and we have the ability to cancel those orders. So we can pull this back if for any reason the demand that we have on our books that is solid yanks out. If someone gets, you know, if someone, you know, runs out of cash or they flip on a contract, Amazon basically said, guys, we're not committed to this.
Right.
This is our plan based on the demand we know we have. But if anything happens, we're not forced to make that purchase. And listen, that's just a really straightforward explanation that you cannot argue against. And they did not articulate that last quarter. And I didn't know exactly what they were, you know, how they were going to articulate this. I just knew they were likely to pull it off because they're not idiots. I mean, Jassy's not an idiot. So that was a big part of this too, is knowing the company would do a better job communicating why they're doing what they're doing, because that was a miss last quarter. And that's exactly what they did. They knocked it out of the park, and they properly communicated the demand, and they properly communicated the way that they would kind of defray that, you know, kind of deal with the risk in the event that, you know, these AI, you know, doubters are if they're theoretically correct and OAI unwinds and, you know, Anthropic falls apart.
Right.
You know, the crazy thing, I mean, is after all of this, like, OAI just announced that they tripled their ARR in 1 month.
Yeah.
Right over the whole last quarter, dude. I mean, it's insane. All the data points are there. So listen, it was a flawless quarter, but I don't even know why Amazon's not trading 20, 30 points higher than it is right now. That's why I'm still heavily in Amazon. I'm still heavily long Amazon. I'm still leverage Amazon, but I pulled all the short-term profits out of that trade. So it feels good, man. It's a good Friday. This is what you live for. You'll spend 20 years waiting on a day like today. So I'm just going to let it soak in. And I'm like not trading today. I just kind of like pulled it out and like I'm taking the day.
I was going to ask, when's the last time in your career you've had a day like this or anything close to a day like this?
Yeah. So it was, I talked about it on the Iced Coffee Hour. It was not a day. It was a series of weeks when I had basically went all in on NVIDIA during the tariffs.
I remember that.
And it was like 10, I think it was 10 weekly trades in a row that made for 10 of the best weeks of my life, trading career. You know, this is basically a very similar amount of money and percentage gain, but this just happened in 48 hours. So it's kind of like what happened with NVIDIA over 10 weeks just happened over 48 hours. So it's overwhelming for that, you know, to kind of experience that as a trader. On something that, and by the way, it's something that you work so hard for all year, and you're just waiting for the market to see what you see, right? You're just waiting. And I talked about this recently, like the market rewards you not for being right. The market rewards you for being right, like before it's comfortable to be right. Right? Like if you're not feeling that level of uncomfortableness, if you're not feeling the anxiety of why the hell don't other people see this, that's the opportunity. Like it's That's it. If you're not there, then you're missing something. There's no opportunity.
And I think some people will approach that with options. Some people approach that with leaps. Some people with stocks. But that feeling, that sentiment you're talking about why does the market not get it, and then you being right and the market eventually getting it, that is one of the greatest highs that hopefully everyone can experience in the stock
market. Oh my God, it's so, dude. There's nothing better, man. I have goosebumps right now. There's just nothing better, dude. Nothing better than that feeling. And by the way, it takes, as often as that happens, you still get, every time you're in that situation, you still think, dude, I got to be missing something.
Yeah.
You always think other people are smarter than you. Now, listen, I'm not at that point. Like, I'm at the point now, finally, and it took decades, to where I have absolute conviction when I put that much time in on something. And I think the key here, I talk about this all the time. The key is you need to fully understand the counter argument to your thesis. You need to understand the counter argument to your thesis better than those that are kind of behind that argument. So however much time you spend trying to validate your thesis on a stock, you should be spending more time diving deep into everybody that has a different thesis.
You shouldn't be afraid of the bear case, right?
Oh my! It's not just not being afraid of it. You need to be so deep inside of it that you know every facet of it so that you can properly assess whether you think that is correct or not correct. Because you have to know what you're fighting against. And once you fully understand the counter thesis, you can say, you know what? I understand why people are shorting Amazon. I understand why they're not long Amazon. I know exactly why, and I completely disagree with them. So that is just key. And that's what made this trade so easy, was that the Amazon trade to not be an Amazon was purely based on a misunderstanding around CapEx.
Right.
And the AI cycle. That's all it was. That's all it was. And then, there were some other issues with Iran and oil prices, this war that keeps popping up. That certainly negatively impacts the retail business, but I don't think that was the driver of any of the negative Amazon sentiment this year.
Camillo, before I let you go and enjoy this well-deserved Friday, you've been around the market a lot longer than a lot of us. This Leopold situation, can you just give your take on how this happened, why this happened, and if more of this could be happening in the broader AI space?
Holy crap, dude. This is a story. This is a movie, dude. This is an absolute movie. First of all, I would say that there are very few people on institutional on the institutional side of Wall Street that do a better job than him and his team in terms of assessing AI opportunity in the sector, right? So he is literally the all-star. He is the best. And yet he seems to have had zero understanding of risk management and of governance on a fund. And I'm completely distraught at how he allowed this to happen and how he was this naive. And this maybe is where age comes in. He's that naive to understand the position that he put himself in by being, from what I understand, ready for this? As I understand it, he was 4x levered. And I think I heard that he owed like $20 billion on the liquidation. So you can't be 4x levered in something that in a sector like this. You just can't. The sector has too much volatility. And clearly the sector goes through FUD cycles. Whether you agree with them or not is completely irrelevant. And if you're basically putting yourself in a situation where others can manipulate your position, which is exactly what happened. Those two short reports that came out on Bloom Energy were basically retreading the exact same storyline that had come out, 2 or 3 times before over the past few years,
right,
on, this source material. They just happened to do a better job putting the story together in a slightly different way to make people concerned. And that was all it took for that doom cycle to start on Bloom. And then once it started, other people saw an opportunity to say, hey, if we could force leverage this guy, right? And then look what happened. Now Citadel supposedly picked up the entirety of all of his positions at, 50 cents on the dollar.
Yep.
40 cents on the dollar. So it's just terrible risk management. And I think that's where age comes in, quite honestly.
Do you think he got too greedy? Is that really it?
Yeah, completely. Of course he did. Of course he did. I mean, what other explanation is there? It's either too greedy or the naivety to believe that what is right is the only thing that matters in markets, and it's clearly not. We've said this so many times. You could be right, and you could still lose a trade because of a misperception or because of manipulation, and you have to ensure that you can survive through that trade until information actually hits parity, and the stock trades on whatever that thesis is, right? It could take a lot longer, right? And if you go through a vicious cycle of misinformation, that can take that trade down. So you can't be so over levered that you don't get to see the end of the trade.
Right.
And that's exactly what happened to him. Now, I think he was right about every thesis he had. I think he's a genius. And yet now he doesn't even get to express, that work and that trade, and someone else is going to get the benefit of it. It's just insane. I think he'll be back. I think he'll raise funds. I think he'll be back. There will just be a corporate governance policy, right? and whatever fund he raises, he's going to have zero say over the amount. In fact, there's probably going to be no leverage in the fund, probably minimal leverage permitted in whatever new fund he raises. I would assume. But listen, man, he'll be back. The guy, he's smart, dude.
Chris, thank you so much. Appreciate you taking the time.
Anytime. All right. All right. Thanks, buddy.
Talk later. Thank you. All right. There it was. Camillo's greatest trading day of his career on Amazon. Now, look, again, obviously, and Chris would say the same thing, if you don't have the risk tolerance to lever up on weekly Amazon call options or NVIDIA like you did back in June of last year, you don't do it, right? But and that's more of a technical thing of how you express the trade, whether it's shares, options, leaps, weekly options, whatever it is. But the sentiment he's talking about and the conviction level he had on feeling the world doesn't get what he gets about Amazon, and the market finally realizing it today. And I think his explanation was perfect. The literal language around capital expenditures, by the way, look at the Googs coming back with Amazon here, was the reason for why the market reacted the way they did. A lot of times it's just, how do you talk? This is why communication is so important, especially as a CEO, because at the end of the day, people are buying the stock largely on what you say. Like, forget the numbers, forget the multiple. It's like, hey, do I think this CEO knows what he's doing? And so I think for Camillo to understand that it was a communication issue, not a numbers issue, and the communication would eventually be solved, and for him to take a big bet that it would be solved yesterday, and it paying off is a testament to conviction. But the risk tolerance on that conviction, if it didn't pay off for whatever reason, and you end up getting hurt by the options or something, that's up to every individual investor to decide what they want to do. But he has been preaching this thesis for a very long time. Same thing with Bloom Energy, and it's always cool when you see someone, no matter who they are, preach a thesis, and that thesis isn't really understood for a while, and then it ends up being something that's respected by the market. Like, it's one of the hardest things to do, and I just have a lot of respect for those that can do it, which this Leopold guy also, was right on. It's just, again, the risk management part of this didn't end up working out. NVIDIA right there trying to get back to 198, 197, but Amazon was well above 270 at one point, now just a little bit above there, but a nice 15% day is not going to make people too upset, as they have owned this name for a long time. Google is well up 5%. Very nice to see. Reddit, are we still below 140? We are just below 140. Coinbase down 13. Marvell up 5. And that's why Zuck did bad. He's bad at messaging. I agree, as I continue to own Meta, but I agree. And I think the Meta thesis will play out. Like, I think it's inevitable. It's Meta. But the short-term communication, Meta doesn't have an AWS, so they have to communicate in a different way than Jassy. And if they're going to try to build an AWS competitor, which is what I thought they were going to do in July, which is why the stock pumped to 680, and then they abandoned that completely during the call. I mean, that's just confusing. Now, that's not a thesis breaker to me, but it's confusing, it's annoying, and it's part of dealing with Zucks. So until that communication becomes more relevant, then this stock ends up taking the hit. Also, the legal fees is an issue. I mean, the fact that they had to pay $2.4 billion in legal, which is a rounding error for them, but there's $1 trillion, apparently $1.4 trillion of lawsuit damages that they could have, which is basically their whole market cap. So obviously, they're not going to have that much of damages, but there's a lot of lawsuits, and I think that is actually the bigger concern more than anything with Meta. But the communication will be very important. 2.4%. Yeah, and the metaverse, right? Like, why is this thing not gone? I don't even understand why they're spending on the meta. There's got to be something they're seeing in Horizon Worlds or whatever for why Zucks keeps investing here. But it's pretty obvious no one is going to put on a headset and live in some virtual world. Microsoft now flipping red. And for 5 years, I mean, they literally changed the company's name to Meta on that thesis. And maybe that's the point. Maybe Zucks is, the ego is getting hit by having to change the name of the company. So he has, he doesn't want to get rid of the thing that he prompted the change of the name, the metaverse for Meta. But man, I think the stat was, if I'm not wrong, they would do $16 billion of free cash flow. Yeah, because they're losing $4 billion a quarter on metaverse. So if they just cut it, even with their capex, they're going to do at least 10 to 15 billion of free cash flow, which I think the street would love. And maybe that stock starts to go back higher. Does the metaverse now include glasses? If they're spending $4 billion every 90 days on glasses, that also makes me question what the hell is going on. Like, does it really need that much investment? If it's only glasses, then okay. But glasses aren't the metaverse to me. Glasses are glasses. Like, you're not living in the metaverse when you're wearing the meta glasses. That's the one thing I hate about this. That you guys know how much I hate this stupid glasses argument. That's the one thing I just wish wasn't part of this thesis, but it's there. I'm not saying it can't be a good business, but it doesn't need $20 billion of investment per year. In my opinion, it doesn't seem like it makes sense. Nonetheless, the communication stuff is very important. Trump is not live yet. OpenAI, by the way, just came out with 2 announcements. 1 billion active users now for their models. They've been toying with that 1 billion number, officially a billion, whether you like OpenAI or not. We need them to grow. It's definitely not good for AI sentiment if they don't grow. So 1 billion users, I think that's weeklies. And then its models are now used by over 2 million businesses, which is what we've got. They should build a product that forces you off Facebook into the real world. That would rip. Dude, I was on the path yesterday, which is like the subway in Jersey and New York. And someone was sitting next to me, and I just glanced at their screen on their phone, and they were scrolling through Facebook. And it was crazy because it just reminded me, like, yeah, people use Facebook. Like, usually people scroll through Instagram, but I never see people scroll through X, by the way, ever. Never see people scroll through X. But he was scrolling through Facebook. He was probably, I think he was like an older guy. And I was like, damn, Facebook, like, this thing is, like, he was scrolling through ads. Those ads were paying for those impressions that guy was scrolling through. And 3 billion people a day still do that. And so, Mark has a stranglehold over the entire world's population. It's just the ads business is not what the street cares about. And so it's still one of those products that's out there, but all these different bets, the street doesn't fully love. Roblox still down 28%. I was not stalking him, okay? He was sitting next to me. You never glanced at someone's phone sitting next to you? Chad says, I literally scrolled through X standing next to you. I'm like, yes, but you're on X. You're a content creator, Chad. That's why you were scrolling. By the way, did you guys see this picture, me and Chad? I've never seen a regular person scroll on X. Like, I just don't see it. People don't use X, bro. I know they have 600 million users. People don't use that shit. Like, we use it in tech and business and stuff, but in finance, everyone else is on Instagram or TikTok. It was the greatest caption in the world. He said, so thankful for Amit to join us to teach us all about the ontology and how to run your own intelligence. Wild how much he has built on Palantir now. I didn't tell you guys I gave a little bit of a workshop on how to build on AIP. I don't want to brag, I thought it was just a nice little 20-minute workshop I could do for some of the participants there. And so, you know, I told Chad that I'm really happy with everything I've been able to learn with building on Foundry and AIP. So I haven't built on AIP ever, dude. I tried once. And, you know, it ended up not really working out. And I went back to looking at green and red candles because that's what my day consists of. But there's a lot of other builders that are building their institutional sovereignty within Palantir. NVIDIA 196, Google 350. Trump is still not live yet. We're going to see he's at Camp David, by the way. So this is not in the White House. This is at Camp David for this cabinet meeting. I am 5'7". I do not look 5'4" in that picture. Chad's like 5'9", so I'm not even that. Maybe he's like 5'10", but I'm not that much shorter than him. Bloom, that's up 2. Do people scroll LinkedIn? Dude, I have told myself for 2 years I will get back to actually posting content on LinkedIn. And it's just, honestly, it's one of those things that I can't pay someone to post for me on LinkedIn. I don't believe in paying other people to post content for you. Like, it's got to be coming from you if you want the content to actually work and really develop a brand. But like, my day is occupied with YouTube and X, and that's a lot to navigate. And I feel like I could cross post on LinkedIn, but it's like LinkedIn people don't care about like stock market stuff. They kind of do, but it's like, I never understand how to post on LinkedIn. Like, you can't just give an update on Reddit earnings on LinkedIn. You know, it's like, it's not built for that. It's like people following you from college. It's like, it's not a content. It's more like company updates and stuff like that. But I usually don't scroll through it. Even though I should. I feel like it's still good to build a business brand on it. Tessie, are we down? 307. That one's still down on the day. Axe, thanks for the super chat. May I ask if the Berlin meetup is happening this year or is replaced with the London one instead? So we are likely having no more meetups this year. The meetups will happen next year. We've done 4 this year, and obviously 4 has been a lot. Last one was in Singapore, but most likely we'll have. I think I am going to Germany next year because there's actually something that I'll be doing in Germany next year, which likely coincides with the Oktoberfest in 2027. So I think October 2027-ish, we'll do the Germany meetup. I actually have a few friends who live in Germany, and honestly, you know, they were telling me about Oktoberfest, and I was like, man, this thing does sound fun. October is usually, it's around my birthday time. Like, I actually would really want to go experience it. So that's where we might have the Germany meetup for 27. Houston's not going to be a meetup. Houston's going to be the Robinhood event, but I'll be there. And I have a bunch of friends in Houston that I'll see. But I mean, if you're there, you know, we'll see people. It's just kind of hard to schedule a full-on meetup at the event. Apple right there. Wow, down 9%. Is that one's taking a hit? Oh, do we have a headline from Trump? Hold on. Is this true? Oh, this was last night. Yeah, I don't really know what the... So Trump says Hamas is going to completely disarm if Israel decides to leave Gaza, which was the headline from yesterday. I'm not sure how accurate that is or if that's exactly going to come through. Maybe that was part of the reason Netanyahu was here on Tuesday. I would imagine Hamas has to agree to that, but Trump is claiming they already have. So that's another thing in the Middle East. We'll see what ends up happening there. The bigger thing is with this Iran situation. I mean, if they're having some level of cooperation between Hamas and Israel, then I wonder if there's any level of cooperation, you know, between Iran and the U.S. Ron, thanks for the super chat. How do you think CoreWeave looks into earnings? I was talking to Steve about it last night. I think CoreWeave is cheap. Again, their market cap's at $39 billion. Their backlog's at $100 billion. At one point, their market cap was $30 billion. So they're at 3x the market cap in backlog. Yes, there's debt issues, but once again, if this AI build out is as massive as it's going to be, and Jensen Jassy are right, and they continue to keep spending on the CapEx. The only reason for the neoclouds is because the hyperscalers can't set up all of this themselves because there is that much demand for AI workloads. And so now I don't know if I want to hold CoreWeave for the next 10 years, but this is one of those names for like the next year. I would imagine the market will recognize that the $100 billion of backlog they have, if that's not contracted away, means that the stock should trade at a premium, or at least half the premium to the backlog. So I don't think CoreWeave back into the 90s is crazy at all. I spent a long time there, but it also depends on AI sentiment. Reddit's still taking a hit. Micron, a little bounce, but still taking a hit. What are people doing over the weekend? Yeah, Micron back below 840. People doing anything over the weekend? I don't think I'm doing anything too crazy. I do have a few things to do, but honestly, ever since I came back from Singapore, I have no desire to. I mean, this week has been kind of crazy, dude. Though, like every day was something else. Like Monday was with Palantir, Wednesday was with Robinhood, Thursday you had Amazon. Like just every day this week has been a long day, but not going anywhere over the weekend. Oh, there is a festival in Toronto. That's true. That's probably going to be a fun one. I remember seeing that last year. Getting drunk. It's not the worst idea. Not the worst idea on a weekend. I don't remember the last time I've been drunk, dude. Like I drank a little in Singapore. I don't think enough to get drunk. I don't really remember the last time. Dell right there, 405. Andy's in Portland. We don't have any earnings today. We had earnings in the morning. We looked at some of them. Nothing else. Donovan says, figuring out how I can get my photography page more traction. Donovan, what is your IG? We'll look at your photography right now. Put it in the chat. If anyone likes it, they can follow his Instagram. I need to also get back to posting on Instagram. It's just, dude, X and YouTube take a lot of time. It's like hard to focus on another platform. I want to make short videos on Instagram just about like the market and the Fed and like stuff like that. I feel like that would be the niche. Because Instagram, you're hitting an audience that is more like not as tapped in as you guys are to like what's happening. It's like a very general audience about not even business, but just like they don't know what the 10-year treasury yield is on Instagram. Like so you have to like really break down and explain like, hey, this is how we finance the country. This is why if it goes up, it's really bad. This is why your groceries are costing more. I feel like that's the content. Although, if we get that new studio in New York, I think the short form content, when we have some really high quality production, is going to be a bit easier. So hopefully in 2027. Joe says he's flying to Panama for 10 days. That's going to be awesome. That'll be fun. Steven said I'm moving to NYC tomorrow. Okay, that'll be great. Qualcomm slowed down about 2 right there. All right, it seems like most people are not doing anything too crazy. Where is Trump? What does he have to say? I don't even, dude, what if this starts in like 40 minutes? They're usually late on this. Yeah, I think it's going to be a while. I think we got some coverage on Leopold. Let's see if we can get some more data on this one.
Selling stakes in private companies to raise cash as it faced a wave of margin calls from lenders this week. Its assets plunged from $45 billion to roughly $10 billion as AI stocks got hit in recent weeks. That's when Citadel's Ken Griffin swooped in to buy a bulk of the fund's public portfolio. You're seeing pictures of Leopold Aschenbrenner, founder of Situ Awareness, coming from the website For Our Posterity. Let's get the details. Bloomberg hedge fund reporter Heather Palmer is with us. Extraordinary reporting. The new bit is trying to offload some private stake to continue to manage the situation.
So what we were seeing is really an incredibly dramatic unfolding of events over the past 24 hours. And what we reported last night was the news that while situational awareness was in conversations with Citadel, Millennium, Jane Street to offload their public book, they were also having conversations to potentially offload their private portfolio. This is a sizable portfolio that includes a $5 billion position in Anthropic. And the fact that they were in talks with Sequoia and Green Oaks to potentially offload those stakes really shows how dramatic the situation was. Ultimately, they did not go ahead with that because they got the Citadel deal. But it is not a great sign when a fund is looking at trying to sell their public and their private book to meet margin calls.
Hema, what's the state of play? It sounds like the firm is still there and has its private book. Has anyone heard from Leopold Aschenbrenner in the last 24 hours?
Yes, he sent a letter to investors apologizing for the dramatic unfolding of events, saying that he is responsible, saying that the fund still has its year-to-date or since inception performance of up 80%, but keep in mind the monthly performance down nearly 70%. Also really important is thinking about when investors got in. The LPs that got in early in the fund's existence, they're probably doing okay. But if you're an investor and you got in the past few months, the pain is pretty bad.
Bloomberg's Hema Palmer. Thank you.
I feel like this story is going to be one of the defining stories of 2026, but at the end of the day, that is kind of how it played out. Last thing we'll look at, folks, I don't think we're going to be able to stream Trump. It looks like he'll take some time, so we will talk about him on the market close and see if he says anything. Google, which is having a nice day, just put out a new video. Looks like they're making some progress here with robotics.
Human body has a lot of muscles and joints. The whole world is designed for humans. We are very used to actually move our body in a very coordinated manner, but it's not true for robots. Hey, Apollo, the kids are going to do some sport today. Could you help them to pack?
I see on the calendar that Jesse has a pickleball match at 2 p.m. and Jeremy has a baseball game at 4 p.m. Let's get started.
The Gemini robotics embodied reasoning model can understand the world, understand what it sees, understand the natural language instructions. Then it's going to call the VOA, Vision Language Action Model, to control the robot to generate the actions in order to accomplish this more complex task. So the robot needs to coordinate all the joints and the actuators from feet to fingertip while maintaining balance. If it's leaning more forward and is about to tip, then it needs to push the legs backwards. And all these things need to happen in a fraction of the second. Even though this feels a very simple task for us, for robots, it needs to make many, many decisions across the entire body to achieve this. So we really want to demonstrate that robot is general and can sort of navigate on this cluttered environment and pick out the right object and put them into the right place. Sometimes it fails and it recognizes these failures and then try again.
Now I will retrieve Jesse's pickleball paddle from the middle shelf.
It doesn't look like Google is going to go away when it comes to robotics. Obviously, Tesla is the one that a lot of people think will win here. SMH flipping positive. Amazon doing a ton with robotics, but the Googs right here, I mean, they invested in Apptronic for a reason. And this robot, I think, is actually Apptronic's robot using Gemini Robotics software. So, I mean, that could be another massive growth curve for Google that they're just seeding right now. And eventually could be something that's very, very important. All right, folks, that is it for me. I will be back on the market close. We'll see how this day ends up. I know we got a little bit of a rug pull in the morning. S&P relatively flat, but yesterday was a great day. As long as we maintain onto some of that momentum, then hopefully we can end out the month and the week a little bit more green, even though Obviously, it's been a pretty ugly month. Amazon, massive day. Google getting a nice little day. Seeing some of the max evidence come back into fruition. We'll see if the semis continue some of the bleeding or if they can get a little bit of a rebound towards the end. But overall, it does look like this broader CapEx thesis continues to be pretty strong. If I don't see people on the market close, I will see you on Monday. We're not going to have the Sunday Future Show, but we'll see you on Monday. And we'll see you in August. Officially starting a brand new month. How can we send an email? amit@akcoms.com. Comms with 2 M's. amit@akcoms.com. All right, word of the day. Anagornesis. A sudden moment of recognition or insight that fundamentally changes one understanding of a situation. And yeah, we'll have basis points out later tonight. Anagornesis. Oh, it might be anagornesis. The earnings call became an anagornesis for investors. The realization that the company wasn't just growing, it had entered an entirely different phase. A moment of recognition that changes one's understanding of a situation. Obviously, I feel like Leopold had an anagornesis on Wednesday when he realized he ultimately was a bit too over-levered. And maybe that put in the broader bottom for the market.
Anagnoresis.
Oh, I was so off. That was so bad. Oh, there's another A there. That's right.
Anagnoresis.
Anagnoresis. All right. That is what we got here. I will see you all in the market close. Thank you all for joining. It's been a wild week. We got through it together. It's, every day we're here together navigating all this stuff. Something I love to do on weeks like this. It is the craziest stuff to analyze, but it makes it fun when you have a community to actually analyze it with every single day. And I don't think the rest of the year is not going to include a bunch of crazy stuff we got to look forward to. So we'll be here every single day. I'll be back in the market close. Thank you all for being here again. And I will see you guys in a few hours. And if I don't, have a good weekend for those that are leaving for the weekend. And I'll see you guys on Monday. Thank you, everybody. Appreciate you all. See you guys in a few hours. Bye, everyone.